So welcome everyone on board to our free class for today. Yes. So we are going to go through together these two modules for today, TAX4861 and 62. Right. So I hope no one is lost there. We are all doing one of those two modules, right? They are the same in terms of module content. They are only going to differ mainly towards the end, towards test 4. That's where you're going to have some material stuff that is purely dedicated to level 2 only. So in between here, everything else is the same. That's why we combine this class. Right, so what will differ is just the level of questioning, maybe. You realize that most of, how do they differ basically? No, they are the same. They just maybe make level 1 a little bit lighter, then level 2 a little bit detailed. But the topics are the same, everything, all the way until October. All right. So I hope you know that there are 4 tests before you eventually sit for your final exam in October. Right. And so what happens is that for each test, there are topics that must be covered to enable you to write that particular test there. Like for instance, test 1 is going to be March, I believe, mid-March. So there are topics that are dedicated for test 1. So you need to know those topics, and you should have gone through them by the time you sit for that particular test. Otherwise, you expose yourself. Otherwise, you're not going to do well in that test. And for you to sit for your October exams, you must meet the minimum qualifying mark for your test. It's been an average of 40% in 3 tests. They take 3 tests, then the average of 40% mark you get into the exam. But beginning this year, there's been some little bit of a shift from the traditional norm. So make sure that you read your qualifying criteria carefully and understand what is the minimum mark that you should get in order for you to qualify for the exam at the end of the year. Otherwise, it's going to be a wasted year, because you will be learning from January all the way to October and not qualify to sit for the final exam. So we don't want it to go that route. Right. So we'll be assisting you all the way until you go and write, and we have to make sure that all of you qualify to sit for your final exam. That's the ultimate goal. Get a chance to sit for the final exam. All right. So the topics for this test that we should go through, let me share them here on screen. I'll share them here on screen. For this module, that's TAX4861 and 4862. Okay, so let me share the topics that we must cover for the purposes of this test, so that as we go along, you will make sure that I did not leave out anything. Right, so here are the topics for test 1. They are found, okay, the material, the stuff that you should go through, it is in tutorial 102, 103, and 104. So that's the stuff that we should go through. So it means that now, in between now and the time you sit for your test 1 exam, I'll be taking you through those tutorial lectures in detail, ensuring that you are ready for the test. Okay, so now tutorial 101, 102, this is going to be looking at case laws for your gross income, general deduction, as well as the VAT-related questions. Right. So now what you have to do is that out of those cases which are found in tutorial 102, right, that is the tutorial for the entire syllabus. You are only going to focus on case law that relates to gross income. Right? The same tutorial later again is going to go to 105. I'm talking about tutorial later 102. So out of 102, you look at the gross income related cases. Don't worry about the general deduction formula ones. Those ones will come later. And you should also look at VAT-related cases there, some case laws, right? So it's self-study, that one. You need to take yourself through that tutorial later, because I can't be here to say, okay, this case, what versus what, this was the entire story, etc., right? It will take us the entire year. So read those cases whenever you sit down, maybe to relax, you feel like reading something, feel like going through something. You can take that tutorial letter 102, identify any case. For instance, your gross income definition, remember those requirements. Know about 2 cases for each and every requirement. You might be required to use it in your discussion question for gross income. Same will apply for the general deduction formula when we do our test 2. Okay, right. Then we have got the next tutorial later is tutorial 103. So that one is going to be for, I think it is going to do with donations tax, mainly donations tax. I don't know if what else will be covered there. Let me check. That one is going to be donation tax. It says donations tax and VAT. So it's going to contain donations tax and VAT, right? So that you find the tutorial 103, it is for these 2. All right, and the last tutorial later that we are going to go through before we sit for our test 1, it is going to be tutorial 104. It is going to cover this. 104. This is your 102. There. It's going to cover that. Right. So that what you are seeing there is the material, is the stuff for our test 1. So by mid-March, you should have gone through what you are seeing there and understood it and be in a position to answer any question, because the questions will subsequently follow. All right. And now this is CTA, good people. Your answers must be CTA-like. They must contain the depth that is needed, that is expected at CTA level. If you are simply going to write a weak answer, even though that weak answer is correct, the marker will simply say, this is an undergrad-like answer, and you're not going to get the marks there. That's what makes passing difficult at this level, CTA and honors level, because you might think that now you ace the test and stuff like that, yet you are just using general words that are used in the streets that are not subject specific. There you won't make it. You don't even go as far as half. You won't even come closer to 40%. Isn't it? So we use the terms for that specific module. When you come here in text, use the text language. You go to auditing, use the auditing language. Because your responses must show that the person has got the subject depth. Is not a chancer. All right. So without wasting time, because the syllabus, okay, at CTA, good people, the quantity is too much. The workload is too much. You need to understand the final details and keep up with the workload. Don't generalize. It will catch up with you, either in the test or final exam. Understand something to the extent that we can explain it to someone else. Don't say, this one, I've got a rough idea. If it comes, I'll just fight for maybe 50% of the marks on offer. Then when I get to the ones that I know, I have to maybe get 85% of marks in offer. It doesn't work like that here. Because those things that you think that you know, they can show you flames. They can come to your strength, your topic strength, the way you say this one, I know it. Then they say, okay, show us. Ask you a question there. You fail that one, which you say you think you know. And you get to the things that you don't know, you fail them again. At the end of the day, you will overall fail, because you're leaving a trail of failures along the way. So yes, let's avoid that. Right, so you have to know everything. There's still time. If you don't know anything, do something about it. Sit down, study it until you understand it. Ask someone who knows to take you through it. In other words, I'm saying CTA does not want chance takers. All right. So according to the structure of our tutorial letters, good people, we will start with tutorial letter 103. Like I've said that 102 is self-study. You will go through it alone, identifying those cases that you might need in answering, responding to the questions on gross income, etc. So me and you, and for those who will come back, we'll start on tutorial rate 103 going forward. For the purpose of this test, 103 and 104. You will have to have a Psych Handbook, Volume 3, by your side as we start here. So without that Psych Handbook, Volume 3, it's going to be difficult for you. You can as well go to church because you're not going to hear anything. I'm joking, you can sit there, it's fine. But for the next classes going forward, you will need it. Because if you don't have that one, you go to the test without having bought it, they will see that you are a chance taker. And we have serious problems. Okay. So have we bought those Psych Handbooks, Volume 3?
Yes.
Okay, so have it handy there. We are going to be going through that one. Because we are using it for the first time, I'm going to take you step by step as to how we use that particular handbook and how you flag. Right. So the first one is donations tax. That's the one that you find in tutorial letter 103. So it means that now what I'm going to do now is I'm going to take you through donations tax. Right. As this could be your first time studying CTA, whenever you sit down to study tax, you need to identify the sections with respect to that topic that you must go through. You won't sit down and say, donations tax, you open your act, you start studying it. I prefer act more than silk because silk is drawn from the act. So if you go for silk, you're reading secondary information. Maybe you can go to silk for further explanation of what the act is saying. But the source is volume 3, the Income Tax Act. So why go for second-hand information when you've got the first-hand information? So do not go to silk before you go to the Income Tax Act. Go to the Income Tax Act first, get confused. If you can't understand what they are saying, then you can go to silk. Silk is going to give you examples of this and that. A small calculation. All right. So we are going to start with donations tax. So I'll show you how you start that one. Right. We want to study donations tax. So what you do is you open the tutorial letter. You open your tutorial letter to donations tax. Right. Open the tutorial letter, you go to donations tax topic there. And when you get there, there is a list of sections that you must study. Those form part of your what? Of your syllabus. Identify those sections because when you're studying a text, you'll be using your volume 3, your Income Tax Act, that one. They will tell you which sections you have to study. You go to your Income Tax Act, you start that particular section. You understand how things work out there. Right, I'll take you through that one. All right, so what I'm saying is it's something like this. If you open the tutorial later, you're going to come across something like this. That becomes part of that becomes the syllabus for your donations tax. Rather take test one. I took the entire test one here, which is fine. Right, these are the sections for your test one, good people. You identify them, right? Donations tax, what are we supposed to know? The section that we must start. We are given a whole lot of sections that we must go through. We see those sections there, right? They are found in your Income Tax Act. You have to study them. There is no shortcut, no double up, no whatsoever. You should go through them. Trying to go into the exam without even going through them, because now when questions come, there's an integration. So you can say, I'm willing to forfeit the marks that might be assigned to section 54, right? But that section 54 can be incorporated in other sections. So much so that by not knowing the section 54, the whole question, you are not going to do it. So study all sections, get to understand them. Right. So this is in your tutorial data. Identify first the section that you must start. The next thing now is some parts of the sections or some sections are not in the syllabus. So identify those that are not in the syllabus and do not study them because you are not going to be asked anyway. No one is going to ask those sections if they are not part of the syllabus. So how are you going to know? They tell you the examinable, yes or no. You will go for those ones that say yes. Those are the ones that are part of your syllabus. The ones that say no, do not bother. Okay. So for instance, they say section 64, they say yes. So the entire section 64 is in the syllabus, so you must study it. They come to 64, 55, 58. Now, here's the interesting part. On 58, they say only study section 58.1. 58.2 is not in the syllabus because it's a no there. So 58.2, do not study it. Trying to study it, it's a waste of time because you're not going to use that information anyway. So when you get to section 58.2, you are going to indicate, you're going to simply cancel it out, just like this. Don't write that out of syllabus. Don't write that cancelled, because in that you're not supposed to write anything. When you write anything, they will take it as if it's not. And if you're going to be writing in the venue, you might be disqualified. Okay, so cancel it nicely so that it won't confuse you. Right, then you've got other sections. You come to 7C. It is in the syllabus, yes. Also, you're going to cover it later in test 4107 tutorial later. But then there are some parts of section 7C which are not in the syllabus. Identify them and cancel them, because starting them, it's a waste of your life. No one is going to ask you, not examining, not at CTA, not at ITC. So do not waste your life. They're doing things that are not going to be tested. You go to 7D, they say study all of it. You go to 56, yes, it is in the exam, but they say take note, 56.1 or do not study. It is not in the syllabus. Right, so it continues like that, good people, until the end. So now our test number 1, here's got the section that you are seeing there. After we are done, sorry, not our first topic, which is donations tax, we are required to go through those sections. Then after going through them, you then can answer questions. Practice. When you are now fine, you move on to the next one. But you all know that time is a scarce resource. So balance your time. Wait, but do not leave out any section. Because of integration, you will suffer. Okay? Right. So now how then do we start the CTA? Now then we have to take you through these sections. Right. So any question before I proceed from here? Any questions so far? No questions. Right. So then I start with the donations tax. Right. I tell you just the basics. Now remember, this is more flow. You are not going to say, according to what we did in class, you don't quote me, you quote the act. So I can tell you that donation tax is calculated at 20%. Don't say, do you know that donation tax is calculated at 20%, I was told. It's a 0. You should say, according to the Income Tax Act, Section 64, the donation tax rate is 20% or 25%, depending on the circumstances. This is law. You use that act. Do not use me. Do not use your knowledge. Make reference to the act. If you are going to say donation tax is 20%, your answer is undergrad-like answer. That's an undergrad response. Yes, it's correct, but it's an undergrad response. Yet the undergrad here, you get your marks there. But yes, CTA, it's not. We can't rely on you. We don't know you. You are not an authoritarian. You have never written a law book. So why must we quote you? Tell us where we get that. That the donation tax is in terms of the section of the Income Tax Act, 20%, section 64, right? And you should also say, maybe for instance, someone donated this to that person, what is the donation tax? Then you should say, maybe if it's an exempt donation, you say, okay, this donation by so and so to this person will not trigger any donations tax because it is exempt in terms of section 56, 1A, 1B, 1C. Those are things that we're going to be going through. So you need to know the act. So if you haven't bought it, it means that we haven't started starting tax. You only start it when you've got that act. All right. I hope we are clear there. Okay, but let's start with the general street talk that we have heard about the story was about the general, about what the donations tax. So we'll say that now this is the tax on the transfer of property. Transfer of property by a resident by way of donation. Okay. Property, resident. Okay. So if you are going to transfer a property to another person and you are a resident person, you will be liable for donation tax. That's what we have heard so far. Okay. This donations tax, it is calculated at 20% of taxable donation. So if I say calculate donations tax, it means that you must be in a position to go as far as determining the taxable donation. Apply 20% on any amount, anyone can do that. It's not a miracle. If you just put 20% on any amount, you might get zero. It has to be 20% of taxable donation. The marks are going to be on your ability to calculate taxable donation. Not on your ability to apply to calculate 20% of an X amount. No, that is just half a mark at this level. All right. So, right. So here, let me say 20% or 25%. It is going to be further clarified. Okay. Then another thing that we must know is that donations tax is payable per donation. So what I'm giving you here, these are the principles that they want to see in your answer. Is payable per donation. So what do we mean by this? If you donate in the morning, you pay donation tax on that thing that you donated in the morning. You in the afternoon, you pay donation tax on the item that you donated in the afternoon. You donate in March, you pay donation tax there. You calculate, you become liable for donation tax in March, you donate again in December. So in other words, I'm saying, when we calculate your donation tax, good people, we don't put together everything that you have donated cumulatively, but it is calculated per donation. It's a principle again that is going to show its face in your response. If you're going to add together the donations that were made by that person, and then you determine your taxable donation and apply 20%, that's a clear zero. The student lacks the best principles of donations tax topic. So take note of that. Pay donation. In other words, there is no donation year of assessment where we group together all the donations that we made and calculate taxable donation and apply 20%. It doesn't work like that. Serious principle that you cannot be forgiven. Okay. So, and then we say that now it's a donation, remember, by way of donation, it means that you did not pay anything. So then this 20% will be based on what? That's what we need to know next. All right. So we say the donations tax is based on the fair value fair market value of the property donated. So in the question, they'll tell you that the asset that was donated, it cost so much, and it has got whatever, all sorts of stories. Then eventually they will tell you the fair value, the fair market value of the asset so donated. So that becomes your point of departure. It is based on fair market value. So it means that now on your road to the calculation of your taxable donation, you should have departed with the fair market value. All right. Okay, so let me say here now donations tax. So this part, what happens with you? It is not always that when you donate, you will be liable for donations tax. There are some donations which are exempt from donations tax. So if a donation is exempt from donation tax, it means that there is no donation tax liability on that particular donation. You donate and you go scot-free, you won't be liable for any donations tax. Okay, now before I go to that one, let me tell you when this 20% should be paid over to SARS. I'm going to say the donations tax should be paid over to SARS, paid over to SARS before the end of the month following the month in which the donation was made. So if you donate this month, we are in February, before the end of March, you should have paid over the donation tax to us. Failure to do that now becomes a non-compliance. Right, this I told you, right? But you cannot use this in the exam. If they wanted to make reference to legislation, you must know where is it in my income tax end. Then you'll be able now in your discussion to say that now this donation tax should, in terms of section 61, be paid over to SARS by 31 March 2022. In the exam, they would have told you the month that the person donated, right? So if you go there with your claiming and simply say, okay, we said the donation tax should be paid over to SARS before the end of the month, following the month in which the donation tax, which the donation was made. If you use that to get a zero, because the marker told you when the donation was made, and you know the month that comes after that particular month in which the donation was made, apply. Yeah, not generalizing at this level. If you say yes, okay, they tell you, hey, someone, Mr. X donated in January, and stuff like that, when should they pay over the donation tax to SARS? If you say the month following the month in which the donation was made, it's a zero. Who doesn't know that the month that follows January is February? And who doesn't know that February ends on 28? Yes, it must be paid over by 28 February. Right, so that's the nitty-gritty that now distinguish an undergrad to a CTA student. Undergrad can go about claiming this, saying it in general, right? So we need to know how we'll be responding to this, because at the end of the day, we are going to write an exam. So we are preparing for the exam. If I don't prepare you for the exam, I'll be robbing you. All right, so now here is a summary of donations tax, how it works. Like I said, that is not always that you calculate. Some donations are going to be exempt from donations tax, meaning that now, no donation tax. Whenever there's a donation, you have to consider if the donation is what? Let's say a donation. If it's an what? Exempt donation. If it's an exempt donation, we are saying it is exempt in terms of section 56(1). It means that that donation in question, it is not going to trigger donations tax. So we say no donations tax on such donations. So now if they tell you that so and so donated this to so and so, calculate the donations tax, the starting point there is for you to say, to consider if that donation is exempt or not. If it's exempt, you state the fact and move on. Not donation tax is payable. This is an exempt donation in terms of section 56(1). Then you go and state the specific subsection. I'm going to take you through that one. I'm going to give you a list of exempt donations. You don't have to cram them because they are there in the Act. You just need to know where to get them. Right. And on the other hand, we have got taxable donations. If the donation that was made in question there is a taxable donation, it means that it will trigger a donations tax. So this type of donations will trigger out donations tax payable at 20% or 25%. The circumstances will determine. Right. That's a mind map that we follow, that we consider whenever we have a donations tax question. All right, so those 20% and 25%, you will know what to get them, is it? Don't use me as the source. I'm not the one who wrote the Income Tax Act. Remember, if you quote me, it's a zero, you need to quote the Act. So you must know where that 25 and 20% is. Right. So that's enough introduction as far as the background information of donations tax is concerned. Now, we need to track this down to our Income Tax Act. Where is it found? Right, donations tax, good people, it is found in the Income Tax Act. If you go to your table of contents in your what you call it, in your cycle handbook there, first page, there are different types of acts that are contained therein. So this one is found under, it is found under Income Tax Act. So let's go to our table of contents first. We want to go to section 54. I will take you through. This is the first section that we must start. Right. Let's go there. Right. And make sure that you are looking for section 54 under the Income Tax Act. Because if you look for section 54 under the VAT Act, under the Estate Duty Act, under the Security Transfer Act, that's going to be a problem. They won't be talking about donations tax. Right. So what you do with people is the Income Tax Act is the bigger of the 4 or 5 section acts that are given. So this is how you open it. You don't use pages for the purposes of Income Tax Act, but you open it in terms of sections. You will realize later also that even their index, they don't make reference to a particular page, but they will refer you to a section. So now this is how we open a section, good people. I want you to randomly open a page. I want us to go to section 54 and study what they said we should start. Because we don't want to be skipping anything. So take your cycle handbook, right? Take your cycle handbook, volume 3. We want to go to the first section that is part of our syllabus there. I'm not going to be fast on this one because you might be opening that for the first time. They said we should study section 54, which talks about the levy of donations tax. This is the information that we are accumulating and putting in our cells for the purposes of responding to questions. So don't take it live. Let go to that content. Right. Let's open our act. Make sure you're under the Income Tax Act. Just open randomly and look at the top there. They will write section. If you look on the right hand side, they would have written section like this, maybe 7. If you look on that other side, they will write maybe SS 7 to something. Depends. So randomly open a page, but make sure you are still within the Income Tax Act. Make sure on top there it's written the Income Tax Act. It's not written value added tax. Here it's written Income Tax Act. But if you have gone too far, when you randomly open, you would see maybe value added tax. Know that you have actually went beyond the Income Tax Act. If you went too far, you might see estate duty there. So may we please randomly open a page. I want to take you through how we utilize this Income Tax Act. randomly open a page there, look at the section on top. If it's a section before section 54, it means that you still have to page going to the right. If, for instance, you open randomly and you're on section 7, you still have got a long way to go. Hold a couple of pages, a lot of them, move to the right there in search of section 54. And also, remember, it won't be at the top there always. If you see that you're on the 50s, check there. Maybe the 54 is included down. Can we do that? Okay, maybe one person who is brave there, randomly open a page and tell me where you are, then I'll tell you what to do as you move towards your donations text. Anyone who is brave, that will assist others as well.
I am on section 54, but on top of the page, it's written SS50E to 56.
So were you able to open 54 straight? Okay.
No, I was paging through.
Oh, okay. Oh, so yeah, there. Right. Someone else, are we there? Are we there? Okay. So no one is struggling, right? All right, no one is struggling there. Cool. So what the UNISA wants us to do is, in section 54, they have an open file. They want us to know what is the heading for section 54. They don't dive inside it and make sure that you understand what the heading of that section is. It says what?
Levy of donation tax.
Yeah, levy of donation tax. So you're going to learn about levy of donation tax. Then they say, subject to the provisions of section 56, right? Now, when they say subject to the provisions of, they are saying that what we are giving here is not conclusive unless it is excluded from section 56, right? So what do they say? They shall be paid for the benefit of the National Revenue Fund a tax in this act referred to as donation tax on the value of any property disposed of. So you can highlight your value there. On the value of any property disposed of, or whether directly or indirectly, whether in a trust or not, under any donation by a resident. I also want you to highlight, key things. There is property and the resident and donation included there, right? So that's key there. They say that you pay donation tax for the benefit of the national revenue, whatever. National revenue, that's your SARS. If you transferred property and you are a resident and the transfer was by way of donation, those are the key things. So now, if they say calculate donation tax, consider if the person who donated is a resident. If the person is a non-resident, you are not going to calculate any donation tax. We have heard it applies to resident only. If it's a theory question, a non-resident donated, calculate donation tax. You would say that now, in terms of section 54, non-residents are not liable for donation tax. Therefore, no donation tax implications for Mr. Z, a non-resident of South Africa. Now we see how the questions are becoming now. You might say, so what are we learning out of this paragraph? You are learning a lot. You see how the questions will be firing at you. Right, so that was it that they wanted us to know then. It's complete like that. Keep it in mind. It's not about you cramming it, but it's about you knowing where to get the information, right? Just assimilate that knowledge, and in case you've forgotten, know where to get that. All right, so now this donations tax, good people, it is found in section 54. So onwards, it's section 54 onwards. So what you do there, this is your income tax act, right? You have got those things for flagging. Some are small and some are big. So you need a bigger one to show where donations tax is. You write there, donations tax, and you go and put it where the donations tax starts. So that now if it's a question on donation tax, you can quickly see where it is and go to it and get what you want to get there and move. Right. So that was one way of navigating the Act. Opening a random page, going to the section. Now there's another one which requires us to use the index. Because this one that I showed you, this way of navigating your Act, it requires someone who already knows the section. Which donation tax is found under 50 something. The person pages through 50 something. But let's say someone wants to go to donation tax section, but he does not know the range in which the section that talks to donation tax are found. This is what you do. You go to index, then you look for donations. It's written in word there. Then the index will then take you to the section inside. So can we do that as well? You can close, complete where it is there, where you get opened, or you put a pen there, or you close, or you put a pen, whatever. Let's go to index and make sure that you are under the index of the Income Tax Act. So now for you to go to the index of the Income Tax Act, you might need a page. Go to the table of contents under Income Tax Act, look at where the index is. Let's go to the index. Let's do that to people. It might sound easy, but now if you're required to do it or to tell someone, then you can dramatize. Are we there on the index? Because the speed of navigating the Act, people will determine if you pass or you fail. If you are going to be spending time looking for sections, struggling to get them, there's no marks for that. There's no marks for struggling. Right. Are we there on the index? Are we there on the index? Now, donation is found under D. So go under D, they look for donation. Then when you get to that, they will tell you which sections you find donations tax. Make sure you do this with people because this cannot be taught going forward. It be now assumed knowledge that the students can navigate the Act out. Can people come here and say, let's go to exemptions, to exemptions. You won't ask me how to open it. If you know my exemptions that are in section 10, you could go there. If you're forgotten, you go to the index and you catch up with others immediately. Are we together? Are we there, good people? Yes. All right. So you see there's donations. If you go there on donations, you can highlight it there. We need this, it's part of our syllabus. Highlight it on the index so that next time when we come for it, you'll be able to identify it easily when it's highlighted. Highlight the maybe red or whatever color. Please use the colors that are actually visible. Highlight, do not cancel. Okay, so there it is. You all see, they said disclosure of commissioner. If you're looking for that one, remove the property of a capital nature. If you're looking for that one, income receipt or accrued. If you're looking for that one, meaning section 55.1, meaning there the referred definition. If you wanted the definition, you go to section 55. If you continue down there, continue down there, towards somewhere you will see levy of, let's say section 54. Out there. Then you can quickly go there if you're looking for levy off. If you're looking for meaning, if you're looking for definitions, you see them there in section 55. You then can go to section 55 now, or 54. All right. So I hope that's fair enough. So that's all that was needed out of section 54. We move on to the next one. They say you should study section 64. Now you see that now when they throw these sections to you, they are not in order. So that's why the speed of navigating the Act is key. All right, now let's go and learn. Let's go and study our section 64 that talks about the rate of donation. Let's say you've forgotten that the donation tax is calculated at either 20% or at 25%. You need to know where is it in the Act. Or is a discussion question, remember? We're not going to simply say, donation is 20% or 25%. No, in terms of section 64, the donations tax is calculated at 20% here or 25% because. So let's go to 64. Navigate your act. Now, this knowledge you need it now when you respond to questions. Don't say, why are we just going through these things? We'll be then putting them together. All right, so section 54, there we go. We're there, right? So you can highlight 20 and 25 so that you can easily see them in the exam in case you don't need them. Right, we are there, right? Are we there? Good people?
Yes.
Yes. So it's section 64, as you can see, then why? You see, the rate of donation is section 64, then dash 1. So the rate is found in section 64.1. That's where you code. That's how you code. You will have section 64.2, it will be talking about other things there. 3, 4, etc. So now let's learn about these rates for the purposes of calculating and for the purposes of our discussion questions, right? They say the rate of the donation tax chargeable under section 54 in respect of the value of any property disposed of under a donation shall be 64 1A 1. 20% of that value if the aggregate of that value and the value of any property disposed of under a donation until the date of that donation does not exceed 30 million. So what they are saying there, they say the donation shall be calculated at 20% of taxable donations if the cumulative donations to date made by that person making a donation do not exceed 30 million. No matter that when they tell you in the question, whether they exceed or they don't. Right, now we go to the next part, and 25% of that value to the extent that the value is not taxed under subparagraph 1. So this is the excess, right? So section 64 1A1, it says that now up to 30 million of the donations are taxed at 20%. And now any donation now in excess of 30 million then becomes taxed at what? At 25%. Right. Now let's say we have got Patrice Mtsipe there donating 35 million. Okay. So the donations tax for Patrice Mtsipe there will be calculated as follows. Okay, let me not say that 5 million. Let me say 40 million. Okay, fine, we haven't done the general exemption, I'll show you. So we are going to say to Mtsipe the donation 40 million, then section 56 2B. The natural person is allowed to deduct 100,000. So we'll come to that one. Don't say what is happening there on 56, I'll explain. So this gives us, how much is that? This is difficult. That's 39,900. Right. This is our taxable donation. Let's say this will be first donation in the person's life. So the donation tax now will be calculated as follows. Right. We've seen that the taxable donation amounts to this much. Right. Then our donations tax. Right. In terms of section 64 1A1, it says that now those donations that do not exceed 30 million, up to 30 million, as does not exceed, right? So it means it includes 30 million. The 30 million part of it, 30 million part will be taxed at 20%. And section 64 1A2, it says that 25% of that value to the extent that the value is not taxed under subparagraph 1. So the value that is not taxed under subparagraph 1, it is the excess of this amount above 30 million, right? The amount is 39,900, like this. We have taxed 30 million in subparagraph 1. So the amount that is not taxed under subparagraph 1 shall then be taxed at 25%. Then now this becomes the donations tax liability now. The total of these two, if that one is 700 and this one is 300, it's 1 million. So you should be able to calculate the total amount there. Right. So do we understand this part? In the interpretation, right? Make sure you're able to tie the act there to the calculation. Don't be interested in the calculation here. Calculation, they don't matter at this level. They don't matter much. Is the interpretation. Are you showing that the excess is taxed at 25%? Right. So I guess we are finding. I guess we are fine. So we have done that one. You can claim that we have already started with the syllabus because we now know that one, now know that one. Now let's go to section 55. There we are going to learn about the definition of this part. Right. Go to 55. They will define for you what you need to know, some definitions that might need to be known by you. Because this is act now, it's another different subject altogether. The words are used different. They are used according to the context of the subject. You find out there are some words there which have got a meaning, a different meaning from accounting and in tax. So you need to know now the ones that relate to this. Right? They go then they say definition for the purposes of this part. In this part, unless the context otherwise indicates, cumulative taxable donation, that one they did not define it. They say you can use the same understanding or the same meaning of cumulative, which is the donation that has been made to date. Fine. Donation now. Definition of donation for the purposes of tax. It means any gratuitous disposal of property, including any gratuitous waiver or renewation of a right. So you can highlight the gratuitous there. Out of the goodness of one's heart. Maybe you gave for free, but later on, yes, it should be a free. You gave someone something for free. But section 58 is going to tell us something else, that you might sell something to someone and still say it's a donation. We shall get to that. So make sure your gratuitous there is highlighted. Right. Donee. Donee means any beneficiary under a donation and includes where property has been disposed of under a donation to any trustee to be administered by him for the benefit of any beneficiary, such trustee, provided that any donation tax paid or paid by any trustee in his capacity as such may, notwithstanding anything to the contrary contained in the trust deed consent, be recovered by him from the assets of the trust. You will need that way. If you see them defining something, most of the section 1s and stuff like that, when you start with your act, they give you definition. When you see them defining something at the beginning of a section, it means that you will need the understanding of that word. It is going to be used inside the act, and it is going to likely mean a context that is different from the one that you know. So it donee, yes, the beneficiary. If I donate something to you, you become the donee. So know what is a donee. And the person who donated is the donor. So they did not define a donor here because they say it is the same context as the one that is in the dictionary or the one that is used on day-to-day basis. Right. Now they're going to define fair market value. Don't say they are just defining words for the sake of defining them. No, they are defining these words because they might have a different meaning from the general context. So now let's hear about fair market value. And the reason why they are defining this here, it is because it is going to be used in this section. Like I said, that the value for donation tax purposes, because you would have given someone something for free, shall be taken to be the fair market value. So now if you leave students at that, and not say to them what is the fair market value, they might have a challenge. So they go on to explain. Here is the explanation. Fair market value means the price which could be obtained upon a sale of the property between a willing buyer and a willing seller, dealing at arm's length in an open market. Willing buyer, willing seller, dealing at arm's length in an open market. So fair market value, there's the value of the asset between unconnected persons or as traded in that respective market. Right, that was one. We have got another definition of fair market value. B, in relation to immovable property. So you highlight that one. So we will have also a fair market value for immovable property that might be different from the definition above. Highlight immovable property. Right, in respect to immovable property on which a bona fide, highlight bona fide, on which a bona fide farming undertaking is being carried on in the Republic. The amount determined by reducing the price which could be obtained upon the sale of the property between a willing buyer and a willing seller, dealing at arm's length in an open market by 30%. Right, I'll do the calculation for that one. In which bona fide farming undertaking, obviously it's a farm. Let's say we have a farm with a market value of 1 million. Right, this is the market value in general. If this farm is donated and the farm was used for bona fide farming activities, bona fide there means what? For good reasons, without deceiving. Right. So if this farm is donated, so the value of the donation here, I'll say donation of the farm. If it was used for bona fide farming activities, I would say 1 million minus 30% of what? Of 1 million. This becomes the value of the donation. And when I do this, I have to indicate to the marker that is section 55 that says so. It's not me. Then I can put my 700,000. Then I can what? Go on with other things. So that's when the sections come in. That's how now we get to court. That's why we should know these sections. Because if you are to write like that and just leave it like that, another cruel marker will say, what's happening here? But if you quote section 55, they know the act in and out. You will be actually giving them a window to look through your mind and say, this person knows. Right? If you leave it like that without this is an undergrad answer, the marking there, people is tough. All right, so we've heard that. It must be a farm in which bona fide farming activities are conducted. Right, we go on to the next definition, being property. Means any right in or to property, movable or immovable, corporeal or incorporeal, whatsoever situated. Right, that's the definition of property for the purposes of the Income Tax Act and donations. In your accounting, you say property is land and buildings. So when you were reading those things, before you read the definition, you were seeing land and building whenever they used property, which was wrong. It covers movable and immovable. In accounting, property is just land and building, immovable. Okay, so balance that one. When you are here, know what is property. For the purpose of tax, when we are in accounting, know what is property for the purposes of accounting. Even money for tax purposes is property. If you donate money, it's still property. Right. So another section that is part of the syllabus there has been covered. Oh, okay. We cover all of it. So we have to go to 3. For the purposes of this part, a donation shall be deemed to take effect upon the date upon which all the legal formalities for a valid donation have been complied with. Okay. So done. 58.1. Put 2 we don't do. So when we get to 58, we are going to cancel 58.2. So these sections that are grayed out, they are not done. They are not part of the syllabus. the grayed out section are not part of the syllabus. Right. So let's proceed to section 58.1. And we cancel O2, it's not in the syllabus. So when we get there, we are going to be told about property disposed of under certain circumstances deemed to have been disposed of under a donation. Let's move. So don't dive inside until you understand, until you have got a rough idea of what the heading is saying there. You must have a rough idea of what the heading is saying. So that now when you get lost inside that big paragraph, you should always try and say, but here we are talking about this. How can I tie this to the heading? Now, property disposed of under certain transactions deemed to have been disposed of under a donation. So now what deemed in text? It means that now you are likening something to something that it is not. So what they are saying there is, there will be certain circumstances which there is going to be disposal of property by one person, not by donation, but that disposal will be treated as if it's a donation. I don't know if you understand each other. It is going to be a disposal under a certain transaction, which is not a donation, but that disposal shall be treated as if it's a donation. Shall be treated as if it's a donation. So let's dive inside and find out under what circumstances can there be maybe a sale of property that will be taken as if it's a donation. We move. Section 58.1, you see that one there. Where any property has been disposed of for a consideration which in the opinion of the commissioner is not adequate consideration. So I wanted to highlight is not adequate consideration. So it is the one that is going to trigger that transaction to be treated as a donation if the consideration is not adequate. That property shall, for the purposes of this part, be deemed to have been disposed of under a donation. So what do we mean by inadequate donation? Inadequate consideration. Inadequate means that something is not enough, right? So I'll give you an example. Someone, you sell something for 1 million. When that something had a market value of 1.2 million. Right, this is the donation that we have under section 58. We look at that, the market value, we don't use the cost, look at market value. So when we are testing for donation, we look at the market value. There is the situation. Is this consideration adequate, good people, to buy an asset with a market value of 1.2? An asset with a market value of 1.2 is sold for 1 million. Is the consideration adequate?
No.
No, it's not.
It's not. So this will trigger donation. So in terms of section 58.1, there is a deemed donation as the consideration is not adequate. An asset with the market value of 1.2 was sold for 1 million. So that's the provisions. That's the application of section 58.1. So sometimes they can say calculate the donation tax. That will be easy. You do your calculation. But what if they say discuss the donation tax implications? Remember, I expected that you'll be a tax practitioner. You'll be providing advice to people. And if you don't have subject depth, you'll be a dangerous practitioner. Then you won't be of help to people. It might end up costing them money. As much as you want to go to a trusted doctor, people want to go to a trusted tax practitioner. So someone comes with this situation and say, hey, you know what? I sold this to whatever, to whatever. Please explain to me the tax implication. You should be able to say to that person, you okay? Your asset is for the market value of 1.2, you sold it for 1 million. Okay. So this is what SARS is going to do. SARS is going to deem that to be to trigger donation tax implication because you have disposed of your asset for inadequate consideration, right? So the provisions of section 58.1 will make you liable for donation tax, right? You have told them that. So the nitty-gritties are going to come after that. Let's hear more. Provided that in the determination of the value of such property, a reduction, highlight reduction, shall be made of an amount equal to the value of the said consideration. So when we are determining the value so donated, remember in donation, I said that the point of departure is market value, is the point of departure, 1.2. So in this case now, you are deemed to have donated 1.2, but then there is a provision there. They say that provision that in the determination of the value of such property, a reduction shall be made of an amount equal to the value of the said consideration. You then say less consideration, being 1.2. Right. So now this is the one that we say is what? Donation. This is the donation. From here, you can run forward with the calculation. If you're already familiar with your section 56.2 B exemption, you do that. You calculate, you move. Okay. So when you do this, good people, you will have to quote your section 58.1. You are communicating with the marker to say to the marker, I noticed that there was a disposal for inadequate consideration as stated in section 58.1. Right. You are communicating, your answer is communication with people. Your answer is not there to punish the marker in trying to understand what are you saying. It should be in such a way that the marker can actually even use your script without looking at the question paper to mark. For instance, if you write like this, I'm a marker. They say maybe they didn't want you to cut the section. You write like this, like a marker. And I'm less to go to the question paper. Maybe this was not 5. I can maybe ask someone, the friend or whoever, maybe, whom I can be sitting to say, check for me, note number 5. Was that donation, was that disposal of was that asset sold for 1 million when it had a market value of 1.2? Verify for me. If it's a yes, I will say, okay, that's the application of 58.1, sorry. Right. So that's what we have in 58.1. Don't worry about 2. It is not in the syllabus. Right. So watch out for this one in the exam. Be able to deal with it. Right. So that one is done. All right. These two good people, they're kind of the odd one out from our donation text. As you can see, they are saying section 7, section 57, section 7C and section 7D, but we were on 50s and 60s. So I'll look at them separate. They also carry their own fun stories about what? About donations, and they're always there in the exam. They will chase you from the test all the way into the exam because they are kind of tricky. So I'll look at them after I'm done with those donations that are bundled together at 50s and 60s. Then we move on to the next. Section 56. We have to do the whole of section 56. It talks about the exemptions, right? Right, but the same section 56.1 do not charge. 1.0. Okay, let me explain our section 56 there, what we are going to find, so that you are not going to struggle. So under section 56, we are going to have section 56.1. It's going to give us a list of fully exempt donations. Fully exempt donations, right? So that those donations, you're not going to be calculating anything. Those that are sitting on 56.1, no calculation at all whatsoever. Then on the other hand, we have got our section 56.2. These ones would give us what? Our the exemptions that which I can say are partial exemptions. Partial exemptions. a portion of a donation, it will be a taxable donation, but a part of that taxable donation will not be taxable. So those partial donations, they will apply to companies, one, and the other one will apply to natural persons. Remember, just to preempt this, if you are a natural person, up to 100,000 of the donations made during any year of assessment is not subject to donations tax. You take it out. This will be your 56 2B. This will be your 56 2A. Right. Now, but for companies, they say if you make a casual donation, a casual donation is a donation that does not exceed 10,000. A portion of it shall be exempt, but we'll get to this later. For now, let's just go and enjoy the cruise of the list of donations that are not going to trigger any donations tax. Section 56(1). Now, if a donation is exempt, people, fully, you are not going, okay, let me just say these are exempt donations, these are exempt donations, fine. If a donation is exempt, could be in the exam, you don't wait to be told that make reference to legislation. Because if you are simply going to say exempt donation, exempt donation, exempt donation, maybe they give you 10 exempt donation and then you go exempt donation, exempt donation, exempt donation, not donation, take exempt donation, not donation, take. You get 0. You are not voting for referendum there, where you need to say yes or no. Once a donation is exempt, you need to quote a section. Are we together? You need to quote a section, not double up. Right. So let's run with the list. Let's run with the list. Number 1, the heading says exemption. In section 56(1). Donation tax shall not be payable in respect of the value of any property which is disposed of under a donation. Shall not be payable, they should be highlighted. It should be clear that the list that we are going to be going through now, it will not trigger donations tax. Number 1, so highlight that one. Number 1, a donation to or for the benefit of the spouse of the donor under a duly registered antenuptial or postnuptial contract, or under a notarial contract entered into as contemplated in Section 21 of the Matrimonial Property Act 1984, Act number 88 of 1984. There we go. What are we highlighting there? A registered antenuptial, postnuptial, we highlight spouse as well. Because in the exam now, when you're looking for a donation in the paper, they told you that it donated to a spouse under an antenuptial or postnuptial contract. You now want to know it's exempt in terms of 56(1) what. So those are the key words that we want to see. So to make them easily identifiable, highlight them. You can't highlight everything, it will be now painting. Highlight the key words. Okay. So there we go, good people. If you donate to a spouse, because that donation, you captured it in an antenuptial contract. Antenuptial contract is a contract that is entered into before marriage. Someone might say, if you can marry me, I would donate a house after we marry. So you go on and marry that person. You are now duly bound to make the donation that you promised. If you do so, that donation is going to be exempt from donation tax in terms of Section 56(1)(a). So here you have to be specific, don't generalize. Section 56(1)(a). If you simply say Section 56(1), the mark will say 1 what? Now we go to postnuptial contract. This is a contract that is entered into after marriage. Maybe you've married and then you say, I'm going to donate something to you, my wife, my husband, in future. That future comes, you donate that particular thing. because it was bound by a post-nuptial contract. You register that. Remember now, you have to register it. You have to go before the courts and say, I'm making a promise that on such a date, I'm going to donate this. At the stage, at the time you go to the courts, you haven't donated, so no donation tax at that stage. The donation is going to be done in future. It has to be registered. Post-nuptial entered into after marriage. So when the contract and the donation is eventually made, it is not going to trigger any donation tax. Right? Whose spouse also should be highlighted there. A spouse, good people, is not an ex-wife, is not an ex-husband, is not a girlfriend. I hope you are clear. Because the exam is going to say, we donated this to an ex-husband under an anti-nuptial contract. Ex-husband, that's not a spouse. Ex-wife, that's not a spouse. And you're going to say, this one I know it. 56(1)(a), you'll be wrong. You know what a spouse is. Sharp. 56(b). So section 56(1)(a), done. Section 56(1)(b), that's where we are now. Right, 2, over the benefit of the spouse of the donor who is not separated from him under a judicial order or a notarial deed. If you're not careful, you might say A and B are the same. You'll be lying to people. A are the donations that are subject to antinuptial and postnuptial. B is just a donation to a spouse, not separated from him. And obviously, that is just repetition. Someone is a spouse if you're married to them. If you're married to someone, you're not separated from them. Right? So that one is just a simple donation to a spouse. It is not going to trigger any donation tax. In the exam, you simply write donation to spouse, section 56(1)(b). The marker knows what you are saying there. What you are, is exempt, or the donation is exempt. The donation to the spouse shall be exempt in terms of section 56(1)(b). That's how we'll be responding to this question. So we need to gather this information to be able to answer the exam. So we cannot jump to questions and move from the question to the act. That would be actually a forgery. You move from the act to the question. You go and apply to the question the principles so studied. I know people like shortcuts. Just take a question paper, say, okay, so here, and if you don't get it, you just pick your phone and call someone. Move from the act to the question, then you can go to someone. Because the knowledge that you seek for yourself, or the one that we learn like in class like this, it is the one that think. Don't do shortcuts here. Come October, you'll be so blank. Because you're roping, cutting corners. You will be so blank, you can't even answer half a question paper. Because otherwise, you will need to conduct a lesson for each and every note. You will be shallow. So guard against that. Start now, go through everything the way we are doing. Sharp. So that one is fine. Then we go to learn a donation that is exempt in terms of section 56(1)(c). Right? Now that one they say a donation as a donatio mortis causa. Donatio mortis causa. What type of a donation is this? This, who knows it? No one. This is donation with death in mind. If you are not careful, you are going to confuse it with the one that is sitting in D. So now, a donatio mortis causa happens like this could be, right? When we say with death in mind, normally, it be after someone has been diagnosed with a terminal illness. In that case, now death is in your mind because you feel like you are about to die. They'll give you the background to the story of the donation. After being diagnosed with coronavirus, cancer, he decided to make a donation. So what is the driving factor for the donation? It is the diagnosis of that terminal illness. So that donation is going to be referred to as donatio mortis cause. There's a cause for making that donation, which is the terminal illness. So the such donations are going to be exempt in terms of section 56(1)(c). So you quote that and move on. Death in mind, you feel like you're about to die. Someone might take a risky adventure, right? Take a risky adventure. Maybe you want to go try bungee jumping there. Before you do that, you know that there's a possibility of dying there if things go wrong. Then maybe you tell someone, go to someone, say, you know what, I'm about to take a risky adventure. Should I die during that event? You have to take over my house, my car, etc. So there's a death in mind. You know, you're taking something that can lead to death. You make a donation on that ground, on those grounds. Yes. Okay. Death in mind. Now let's see how this one differs from B. So from D. In D, they say a donation in terms of which the donee will not obtain any benefit thereunder until the death of the donor. A donation in which the donee receives no benefit until the death of the donor. Now, this one, there's no donation at that stage, isn't it? Until the death. So in this case now, I might say, when I die, you will take over my car. When I die, do you take the car immediately? No, I haven't died yet. You need to wait until I die. It's clear then. So that one is just a mere statement. It will not trigger a donation tax. SARS will not say, because you've made that statement, please bring the 20% here. So I hope that one, I hope you are able to make a distinction between these two. This one is when I die, and this one is triggered by being maybe diagnosed with a terminal illness or taking a risky adventure in life. There is something that drives the cause of the death. There's something that actually makes you believe you're about to die. But this one, the D one, we all know that one day we are going to die, but do you feel like you're about to die? No. We take it to D. And is there a donation in D there? No. It's just a statement. Donation will take place in future. Are we able to make the distinction of the two good people? Because now when they come as notes in the exam, are we going to be able to balance this? Are we going to know what to look out for? Let's talk with people. This is CTA, right? So for these things to think, yeah, for these things to think, we need to discuss them. All right. Now we continue. We move on to another one, which is E, still in the syllabus, which is cancelled within 6 months from the date upon which it took effect. All right. If a donation is cancelled within 6 months, it will not trigger donation tax. This one, you can claim a refund, in other words, because remember, if, for instance, you cancel it after 5 months, after 2 months, the donation tax will be over to SARS there. So you can go and claim a refund. Okay. If made by or to or for the benefit of any traditional council, traditional community, or any tribe referred to in section 10(1)(t)(7). So what are we highlighting there? Traditional council, traditional community, or any tribe. So if you donate to that, donate to a king, right, etc., it is going to be exempt in terms of section 56(1)(f), right? Quote the correct section and the subsection. No part marks. Either you're wrong or you're right. Quote the correct section. Right, so we move on and find out here. So which exemption is sitting there? Here we go. If such property consists of any right in the property situated outside the Republic and was acquired by the donor, then they list something, there's a list of things there. So what they are saying there, they say, if a property is donated and this property is outside the Republic, It might be exempt from donation tax provided the following. We move. So let's hear there. Was acquired by the donor before the donor became a resident of the Republic for the first time. Someone has got a property in Botswana, is a Botswana resident. He migrates to South Africa. He becomes a South African resident. Then later on in life, he donates that property which he acquired in Botswana before he became a resident. Such property so donated will not trigger donations tax in terms of section 56(1)(g). Okay? Or by inheritance from a person who at the death of his death was not ordinary resident in the Republic, or by a donation if at the death of the donation the person was a person other than a company, highlight other than a company, not ordinary resident in the Republic, highlight other than a company. It's key. So they in that too, they say that now if this property was inherited from a person who was non-resident, or if this property was donated by a person who is a non-resident, but this person is other than a company. Now, this is what we do in tax forbid. In tax, we have got two persons. We have got a natural person and we have got a company. Right? If I say other than a company, what do I mean? Say this person is a person other than a company. Am I saying the person is a natural person, or am I saying the person is a company? We've got two people.
The natural person.
The natural person, yes. So that other than a company is actually referring to a natural person. They like this in text. It's not clear cut, it's not straightforward. They are referring to a natural person. But unfortunately, we cannot cancel that one and put natural person. You are not supposed to write anything in this act. If you write anything, they take it as notes. The invigilators can actually what, or suspend you or whatever, disqualify you from sitting for that exam. Yes, you might be writing from home and say, I'm going to write because no one will check my edge. When we're still at the venue, they will move around checking these ISA books if there are no papers inside or anything written. But now you're lucky to be writing from home. But however, now, the same act, you will need to write to ITC. And ITC is very best. You will take it there. They also search if anything is written there. It's taken as notes. And SAICA will just send you home straight. You'll never become a CA again. Because you would have what? Partaken in an act of dishonest. If you are accused of dishonest, you cannot work in the finance sector in your life. So do yourself a favor, just know that other than a company means a natural person. Other than a natural person means a company. All right, 3. Out of the funds derived by him from the disposal of any property referred to in subparagraph 1 or 2, or if the donor disposed of such last mentioned property and replaced it successively with other properties, all situated outside the Republic and acquired by the donor out of the funds derived by him from the disposal of any of the said properties, out of funds derived by him from the disposal of or the revenue from any of those properties. Okay. So let's talk about that guy from Botswana who came here and made a donation of an asset that they acquired before they became a resident. They say if that person does not donate that property that he left in Botswana, but sell that property and donate the proceeds will still be exempt. Or if he sells that property and buy another property with the proceeds and then donate that other property that was bought by the proceeds of a property that was acquired before the person became a resident, they say still that successive property will be exempt from donation tax. You get it. All right. Then we go to, are we clear on this donation that is sitting on section 56(1)(g)? Are we clear on that one, people? Okay, I'll assume we are. Right. Section 56(1)(h). By or to any person, including any sphere of the government referred to in section 10(1)(a), C cap A, C cap E, C cap N, C cap O, C cap Q, D, or E. So now basically, those are two things there. It is a donation to the sphere of the government. When you talk about the sphere of the government, you are saying that you donate to the government of the republic, or to the municipality, or to the council. Such donations shall be exempt in terms of section 56(1)(h). Now, what we see in section 10 then are exempt organizations. So this same section also covers public benefit organization, registered public benefit organization. So a donation to a registered public benefit organization, exempt in terms of this. Donation to a council, donation to a municipality, donation to the government in general, they are exempt in terms of that particular section. But now here's the thing, the exempts, they don't generalize. They won't say he donated to the municipality, he donated to the council, he donated to the government. They will state he donated to the Tshwane District Council, he donated to the Tshwane municipality, Johannesburg municipality. Know that those are municipalities, those are spheres of the government. Don't say in class we did not do Johannesburg municipality, we did not do Tshwane municipality, we just said municipality. We did not specify. No, we are referring to. So those municipalities that would be mentioned in the question, yes, there are municipalities exempt. Councils mentioned therein exempt. Public benefit organization, provided they are what? They are registered as such, exempt in terms of that particular section. All right, we move. So you have to know where to get this. If you don't know where to get, if you can't know it by head, of course, it will be challenged, but know where to get it so that you can cut it. So what you can do is simple to say, okay, my exemptions for donations are in section 56. But to know the specifics one, you might need to go there. Because you can't be seeing 56A this, B this, C is this, but because you have been highlighting here and there, you know that when you get to 56, you can easily see the specific exemptions. Right. Next, we are going to go to K. As a voluntary award, remember your I and your J are deleted. Don't even bother what was there or what is going to be put there. Right? You don't have to. Right. It's not a part of your syllabus because it was deleted. Right. As a voluntary award, the value of which is required to be included in the gross income of the donee in terms of paragraph C, D, and I of the definition of gross income in section 1, or the gain in respect of which must be included in the income of the donee in terms of section 8A, 8B, and 8C. Right, so now if someone receives a volunteer hour, this one they have to tell you, right? Because some of the sections, they are not part of the syllabus. But because they are mentioned there, they can also mention them in the question. When someone receives a voluntary award, they will tell you that yes, this award is going to be included in their gross income. If they say that, you know that it is going to be exempt. If they say the award so received will not be included in gross income, you will calculate. Because we exempt from donation tax the hours that are going to be included in gross income. So understand the award, understand the story of the award that is going to be given in the scenario there, and make sure you are clear. And make sure you are very, very clear. Will it be included in gross income or not? That's the deciding factor. If it's a yes, it is exempt from donation tax. If it's a no, calculate donation tax and move. Right, so the CTA quantity people, it's a lot. If you don't keep up with it, you will have serious problems. You have to put in extra hours. Whether you're working or not, it's no excuse. And read to understand. Practice everything. Because I'm telling you, people drop out around June. You realize that now the quantity that you haven't covered in the previous test today is too much. And at the same time, the quantity that is yet to be covered, it's a lot. So now how do you do it? Do you start going backwards and accumulate more trouble? Or do I study what lies ahead and then I'll go back to the things that I did not do, maybe later on during that 1 week of revision? It's impossible. It cannot be done in a week. So don't put yourself in serious trap. Start now, move now. Otherwise, you come close to passing, but then fail because there is a test that you did not start. You said we were busy at work, so the test one content, I did not go through it. It's the one that caused me to fail. You don't want it to come to that. You start now, you move. No time to play. The workload is a lot. It's a lot. All right. It's not a threat with it, but I don't want to see it when it's too late. So beyond. All right. L, if such property is disposed of under and in pursuant of any trust. So if it's trust that is donating on behalf of someone, they say it is exempt in terms of that. If it's a trust that is donating, not when someone is donating to a trust. Donation to a trust will trigger donations tax. All right. Move on to M. If such property consists of a right, other than a fiduciary, usufruct, or other like interest, to the use or occupation of a property used for farming purposes, you highlight, for no consideration or for a consideration which is not adequate consideration, and the donee is a child of the donor. Highlight the donee is a child of a donor, highlight farming purposes. So now what do I say? If you donate a farm to your child, no donation tax, you quote that section. Or if someone donates a farm to their children, no donation tax in terms of this particular section. I hope we are clear then. Okay, I hope we are clear. Right, and on or after the 7th day of August 1966, by a company which is recognized as a public company in terms of section 38. Right, if a public company makes a donation, good people, if a public company makes a donation, that donation is exempt in terms of section 56, 1N. I hope it's clear. So watch out as to who is donating. If it's a public company, that is going to be exempt. All right, do not go through O, it's not in the syllabus, so we go to P, deleted, Q, deleted, R. By a company to any other company, that is a resident and is a member of the same group of companies as the company making that donation. So companies in the same group, if they donate to each other, there is no donations tax implications. Very simple, right? So the story will be big in the exam. XY Limited holds maybe 52% interest in Z. Then regardless of the direction of the donation between those two companies, it is going to be exempt in terms of section 56(1)(r). Whether the parent donates to the subsidiary or whether the subsidiary donates to the parent, no donations tax implications. All right. So there goes your section 56. There goes your section 56. So we have to get to this one, then we do questions there. After that, we'll be able to do questions before we go to touch our section 7C and D. Right, so this one is done. 7A, donation by spouses married in community of property. It's something that you know, to the extent that you may not even bother to go to that act there, but that will be disaster. It will be brewing disaster, because here we're now doing serious things. Right, we all know, good people, that persons married in community of property, if they donate, they deemed to have donated in equal shares. So let's say A and B are married in community of property, and A donates 1 million. Right. Then they say calculate the donation tax for A. Because they are married in community of property, you're going to say value of property donated, section 57 cap A, 1 million divided by 2, 500,000. Because they are married in community of property, this section 57 cap A, it says that now they are deemed to have donated together with B in equal shares. If they want the donation tax for B, it'd be the same calculation. And you quote, when you divide it, you quote and you're communicating to the marker that, yeah, they are married in community of property. That's why I'm dividing by 2. Communication. Communication. Are we together? Okay, you need to understand these things, good people. Right, let's go now to section 57A. Donation by spouses married in community of property. For the purposes of this part, in the case of spouses married in community of property, where any property is disposed of in terms of a donation by one of the spouses, and such property falls within the joint estate of the spouses, such donation shall be deemed to have been made in equal shares by each spouse. So you can highlight what is key there for you. Maybe you're saying equal. Maybe you're saying joint estate. Right. Key things must be highlighted. Key things to be highlighted. Right, good people. Now, the second part would be, so when you quote this, you will say what? A. It is the one that applies. A. Okay. Let's go B and find out. Such property was excluded, highlight excluded, from the joint estate of the spouses. Such donation shall be deemed to have been made solely by the spouse making the donation. So what they are saying there is that they say, however, if the item in question, property in question is excluded from the joint estate, they are not deemed to have donated in equal shares. Only the one who made the donation is the one who is deemed to have donated. Clear? So read careful. Don't see marriage in community of property and jump and conclude. You still have to verify if it's included in joint estate or not. Right, so it was a short and sweet section there that we had to look at. So that one was short and sweet there. No much stress. Done. Hear it. We go to 57. Disposal by companies under donation at the instance. No, people, I made a mistake here. I didn't go through section 56.2. I didn't go through section 56.2. I didn't go through section 56.2. It's very key. It's very key. It's very, very key. Please, let's go back to 56.2. I can't say we'll come back to it. If I forget, it is going to be a big problem. Right. If I forget, it's going to be a big problem. Section 56.2, this one talks about what? Exemptions. Partial, right? One, for casual donations by companies, an amount of 10,000. You get this in section 56.2a. Two, general exemptions that apply to for natural persons, which is an amount of, this is per annum, right? Per annum. Here also, it's an amount of 100,000 per annum. Okay, so now what is a casual donation? The casual donation is a donation that does not exceed 10,000 by companies. Is a donation that does not exceed 10,000. So if a company makes a casual donation, right, up to 10,000 of that donation so made shall be exempt from donations tax. All right, we move, good people. For general exemptions, we are saying that in natural persons, they can make a donation. During any year of assessment, you can donate up to the property worth 100,000 without you having been liable for donations tax. Without you having been liable for donations tax. Right, in the case of taxable donations. All right, let me give you an example for two. This one for natural person, the common one. If someone donates maybe donation of a car, the car costs 800,000. And you want to calculate donations tax for this person. You write donations of a car, market value. We use market value there to identify the value of the donation. And then here we have to say section 56.2b is the natural person, right? We take out 100,000. Then you're left with 700,000. This is the value, or rather, it is the taxable donation. Then I said donations tax now. At 20%. I have to quote section 64. We'll get to 64 soon. It is the one that tells us the rate of donation. That's how we work out our answers for the purposes of CTA. Right. Its due date, let's say it was in February. Then I would say due date. Uh, 31 March 2022. I'll quote section 61. It is the one that says, before the end of the month, following the month in which the donation was made, this donation tax should be paid over. Okay, that's how we work these things out. And that's why we go through these sections, good people, for you to write correct answers and complete answers. All right, so I'll take you through two there. I don't want to take chances and say, you will see what they say there. No, let's go together. Right, this, I was explaining the concept of section 56.2b, the annual distribution for natural person. Let's go. Donation tax shall not be payable in respect of A, so much of the sum of the values of all casual gifts, highlight casual gifts made by a donor other than a natural person. Also highlight other than natural person. Remember we said when you say other than, there are two people for tax purposes, companies and natural persons. So when they say other than natural persons, they are referring to companies that these casual gifts should have been made by a natural person, provided that where the year of assessment exceeds or is less than 12 months, the amount in respect of which the tax shall not be payable in respect of this paragraph shall be an amount which bears to 10,000, the same ratio as that year of assessment, 3 years to 12 months. It talks about apportionment. The NOP, it says, so much of the sum of the values of all property disposed of under donation by donor, who is a natural person, as does not during any year of assessment exceed 100,000. The calculation that I performed here. So that annual exclusion of 100,000 applies to natural persons per annum. Let me do another exercise. Let's say you donate in the morning. Donation, you donate something worth 70,000 per natural person. Section 56, 2B says you've got a general exemption of 100,000. But in this case, we'll say limited to 70,000. Then taxable donation there will be nil. Right. So if this person, this was donation number 1. If this person makes another donation, donation number 2, we say donation, let's say it amounts to 40,000. Right. Remember, per annum, you've got an exemption of up to 100,000. This person has utilized 70, so 30,000 remain. So here he can only apply 30,000. So our section 56 2B here will be equal to 100,000 that is available per annum, less what is utilized. Then you get this. Then this becomes taxable donation. Then we say donations tax at 20%. Section 64 says that 2,000. Right. Now know how to actually apply these exemptions, good people. You will need them. Are we together? Okay. So, right, we did this one. We want to do this one now. And okay, we are left with these ones before we maybe start doing questions, application. So make sure that you understand, good people. Otherwise, you see numbers flying. Make sure you do understand. Right. So 57, disposal by companies under donation at the instance of a natural person. That one is key. So what that means, good people, donations by companies at the instance of a natural person. Now, what do this mean? They say you've got the CEO there, or any person now, natural person. This person gives an instruction to a company, ABC Limited, instructing ABC Limited to make a donation of, say, 1 million. To, it could be another company, as long as they are not in the same group, it don't be exempt, or it could be a natural person, etc. Now, this is what they are going to tell us. What are the implications of this? So section 57 is going to answer this question as to who is liable. Is it this person who gave the instruction? Is it the person who gave the instruction? Or is it the company? Quite interesting. We go to 57, we shall be answered. And when we see such a question also in the exam, remember this. We are learning these things so that we can use them for exam purposes. Not because it's a boring sound. You will use the question will be coming around that. You'll be grilled around that. That would be the grilling. All right, we move, good people. Now, disposal by companies under donation at the instance of a natural person. If any property is disposed of by a company at the instance of any person, and that disposal would have been treated as a donation had that person, yet that disposal been made by that person, that property must, for the purpose of this part, be deemed to be a donation, to be deemed to be a disposal under a donation by that person. So you'll highlight by that person. So this guy gave instruction to this company to make a donation of 1 million. So it is deemed to be a donation that is made by that person. This is the person that is deemed to have made the donation. This person who gave the instruction is the one that is going to be liable for donations tax. Are we together with people? Okay, yes. So when we calculate the donation tax, the question will then say, calculate the donation tax for the CEO and the company. We are going to calculate our donation tax under the CEO. And when we get to the company, we will simply say, no donation tax liability for the company in terms of section 57, because the person who gave the instruction is the one who is deemed to have made the donation. You will have to remember all this. So much information that needs to be remembered. So that's why you have to start early and move. Because to try and know these things a day or a few months before, it is not going to work. Never. You will not win. Sure. So another implication, right? So this one is very easy. This one you can also do it. Value of property disposed of under donation. Remember what we said, straightforward. We said that now the value of the property disposed of under donation, it is the market value, fair market value, simple. Depart with fair market value. There will be the cost of that property, there will be fair market value of that property, there will be tax value of that property, there will be carry amount of that property. In terms of section 62, it is the fair market value. Simple. So when you write here your calculation, you quote section 62 because you'll be using the fair value there. And because section 62 says we use the fair value. So if you're going to take any amount, maybe like a cost, it means that the student did not start the section 62, which tells the students what is the value of the donation. And you are not going to be forgiven because that's the principle that is being tested. That's the principle being tested there. You are not going to be forgiven. You will have to repeat. Because if you can't see the principle being tested, then it's a problem. There you won't be forgiven. Right. Start now while there's still time to internalize these things. Then we come to this one. Persons liable for donations tax. Persons liable for donations tax. Now remember, in the donations contract, we have got the donor, we have got the donee. These two people. So now the question is, who is liable for donations tax? Is it the person making the donation or is it the person receiving the donation? Right? Section 59 answers that. In a discussion question now, when you calculate you will tell them that X is liable for donation tax in terms of section 59. Question is, who is liable?
It's the donor.
The donor, right?
Yeah.
And if there's gonna be a provision there that if the donor does not pay within the stipulated period, then both the donor and the donee become liable. And if the donor does not pay the full donations tax, the donor and the donee now would become liable for the what? Outstanding amount. Right. You see why you have to go through those sections, yes. So that you know every detail that will be tested. All right, we move 59. Persons liable for the tax. The person liable for the donation tax shall be the donor. That's the default. It is the donor. Correct. There comes the provision. Provided that if the donor fails to pay the tax within the period prescribed in subsection 1 of the section 6, the donor and the donee shall be jointly and severally liable for the tax. So the period within which the donation tax should be paid over to SARS, it is stated in section 6. Right. If the donor does not pay within that period, which we soon know, then both of them shall be liable for donation tax, jointly and severally. Sharp. Hope is clear there. We've been now saying these things in your discussion questions. That because he has failed to pay the donation tax within the stipulated period of what? Now both of them are liable. They would have said calculate and state who is liable. Right? Obviously, a student will give a full answer, say both of them are now liable. You get the marks. If you had crammed partially that section, you say the donor and you get what? A 0. So read and understand the question good people and respond accordingly. Right. Let's go to section 60 now. And we have to study the entire section 60, as you can see there. Payment and assessment of the tax. Right now we want to hear how is this donation tax paid? Is there a year of assessment where we put together all the donations, or we are simple when to say you paid per donation? Let's find out. Payment and assessment of the tax. 1. Donation tax shall be paid to the commissioner by the end of the month, following the month during which a donation takes effect, or such longer period as the commissioner may allow from the date upon which the donation in question takes effect. We move on. Where a donor has during the year of assessment disposed of property under more than one donation, in respect of which an exemption may be applicable under the provisions of section 56(2)(a) or B, the amount to be exempted in respect of any such donation shall be calculated according to the order in which such donations took effect. So they are saying, I also actually practically demonstrated that here, that the order of donations, it is the order in which the exemption of 100,000 or 10,000 shall be applied. And when we started there, I gave you mini notes and told you that the donations tax, donations are deemed to have taken, the donations tax is calculated per donation in that specific order. You donate in the morning, donation tax, you donate in the afternoon, donation tax on that one. We don't wait until maybe the end of the year of assessment to put together all the donations. No. I hope we are clear there. All right, let's move to 3. Where a donor has disposed of property under more than one donation on the same date, those donations shall, for the purposes of determining the tax payable in respect of each donation, be deemed to have taken effect in such order as the donor may elect. Or if the donor fails to make an election within 14 days after having been called upon by the commissioner to do so, in such order as the commissioner may determine. So that one is more of a what? Bending of the rule. It is more of a provision. So they say, however, as we have said, we say it in 2 there, that the order used is the order in which the donations were made. But they say that you can choose to say, okay, fine, on the same date, I've donated 2 times in the morning and afternoon. You may choose. You have that election to say, okay, you know what, SARS, when we calculate out my donation tax, let's assume that the one that I made later is the one that I made first for the purposes of applying my 100,000. They say it's allowed. Then they go on to say in B there, that if you don't choose, a SARS can determine the order. But the default is the order in which the donation was made. Right, number 4, the payment of the tax in terms of subsection 1 shall be accompanied by a return. So they are saying that now, how then do you pay this donation tax over to SARS? Do you simply pay the 20% over to SARS? No, they say it must be accompanied by a return. It means that now you need to fill in a donations tax form. You can get it online, submit it, declare your donations. The commissioner may at any time assess either the donor or the donee, or both the donor and the donee, for the amount of donations tax payable, or where the commissioner is satisfied that the tax payable under this part has not been paid in full for the difference between the amount of the tax payable and the amount paid, but the payment by either of the said parties of the amount payable under such assessment shall discharge the joint obligation. Okay, so those are more provisions, right? In addition to the information that you know, they say SARS can choose who to assess, but that's the what more of the provisions. The defaults we now know them. But now the question can say, donated A donated to B, meaning A is the donor or B is the donee. Then they say, under what circumstance will B be liable for donations tax? There you will run to section 65. And you can also run to section 59 that talks about the persons that are liable. Is the donor, but if the donor defaults, then both the donor and the donee become liable. Right. So that is the first part of our donations tax there. It's completed. And that's how you study. That knowledge of yours now, you need to apply practical. Then later, after we are done with this, then we close it off by looking at the donations tax and capital gains tax. Okay. Right, so now here are the questions. Let me see if I can share them to the group. You want a break? Break or no break?
Just 5 minutes.
Right, 5 minutes break. Let's be back at 20 past. That will give me time to also look for a question.
Thank you.
Right. All right. Welcome back. So we have gone through the sections for our donations tax. Now we need to apply to our questions practically and theoretically, depending on what the question wants out of us. Right. So we'll look at the previous tests that were written. And we do things for that particular that was required of us. So now what we'll be doing, the questions are going to come from the material that we have gone through. So if you have gone through everything there, things are going to be quite easy. Right. So I'm going to focus on the questions for donations tax because so far we have covered donations tax only. Right, there we go. A part of it, remember, we still have got to do section 7C, we still have got to do section 7D. Right, calculate all the donations tax implications of query 1 for Safe in the Sun Limited and indicate when the donations tax, if any, will be payable. Address every donation in your answer, even if another person is liable for the donations tax. Query 1, we go to query 1. We're accounting for this company, but they say even if someone is liable, we have to address it. So USEF will be making donations. But from that statement now, it says that someone might be liable. So under what circumstances can a company make a donation and then someone else becomes liable for donations tax? Under what circumstances can we have such a scenario? Where a company donates, where Usef in the Sun donates, but another person is going to be liable for donations tax. When Section 57 applies, when Safe Sun was instructed by a natural person to make a donation. Okay, so that's what they are saying. So we might see something like that. Now let's go to the scenario. Danny Griffiths is the financial director of Safe in the Sun. Safe in the Sun is a resident company that manufactures suntan products, specifically formulated for the harsh African climate, classified as a process of manufacture by SAS. These products are sold nationwide in stores. Safe in the Sun has a December year end and is a vendor for VAT purposes. That only makes taxable supplies with 1 month tax period. All amounts exclude VAT if applicable, and all parties are registered VAT vendors unless specifically stated otherwise. Danny needs to address the following 6 queries that the financial accountant brought to her attention. Query number 1. Here we are addressing query number 1, remember. Donation tax implication for Safe in the Sun. And they say where any other person is liable, we have to also say so. On 1 March 2020, Safe in the Sun Limited donated suntan products with a cost price of 20,000 and a market value of 27,500 to a local community project, which is not a public benefit organization. You may assume that this is the first donation made by Safe in the Sun in the current financial year. So that can be also sending a message to you as far as the utilization of Section 56 2B exemptions are concerned. Is the first, right? Donations tax, good people, is payable per donation. So having read that, right, and seeing that these dates, they come after that date, the order, we maintain that. Suntan products. So what you are going to do now is you will come here, good people. Now I want you to keep an eye on the value of the donation there. The value of the donation is what? Which one is the value of the value for the donation tax purposes? We have got the cost, we have got the market value. Which one is the value for donations tax purposes? Which one?
Market value.
Market value.
Market value. Yes, that's the market value. Right. And now look at the market value. It is an amount of 27,000. It's being donated by the value of 27,000. It is being donated by a company. So this is not going to qualify as a casual gift. A casual gift should be less than 10,000. So we are not going to utilize the Section 56 2B1 exemption. It's not a casual gift. So we are going to calculate the donation tax on the full amount. You write here, donation of suntan products. I want you to quote in front there, that Section 62. Yes, it explains to the marker that the value that I took of 27,500, it is in terms of Section 62. That's the one that gives us the market values. The one that I said you will do it. But obviously, and we agreed that it's the market value. Right. So now you can say, if you want to go a step further, you would say maybe here that section 56 2A exemption does not apply as the products cost more than 10,000. Hence, not a casual gift. Right. So this becomes the value donated. If you want there, you can then put a dash to show that now no exemption will apply there. Then you get to 27,500. Then this becomes your taxable donation. That's the amount on which the donation is going to be. Right. Then you say donations tax. Section 64, they give us the rate at 20%. 20%, telling the marker there that the 20% utilized is in terms of section 64. Right. So that one has been answered. But now you need to provide at this stage, good people, we give competent answers. Right. Competent responses. Your response must be complete. Did they simply say calculate the donation tax and end there? No. You are required also to indicate when the donation tax, if any, will be payable. Payment date. Section 61. By 30 April 2020. Right? See, it's key there. Payment date before the end of the month, following the month in which the donation was made. When was the donation made? March. What is the end of the following month? 30 April. Don't dramatize. Are we together, liquid people? Make sure you address your required in full. Are we required to do anything? Address every donation in your answer, even if another person is liable. So where another person is liable, we'll address it, and we need to state the fact that this one, someone else will be liable. So are we fine with the calculation? Yes. All right, we move on. That was the first donation there. Donation tax is calculated by donation. Keep that in mind. Next one, it's here. On 15 June, Mr. Wave, the sole shareholder, instructed the store manager to donate certain products with a cost price of 1,000 and a market value of 1.2 to his son's cricket team before their winter tour to Devon. There was no advertising benefit derived from the donation. Right. Which section is being tested there? Which section is being tested, good people? And what will it require us to do? Which section is being tested, good people? All right, so here we are seeing that a person who have instructed the store manager to make a donation, and the donation was met. These items cost 1,000. They had a market value of 1.2. Address every donation, even if another person is liable. So you are going to write them. We might have to indicate that this one is payable under one. Right, to give just a brief background to say, WAVE is deemed to have made the donation in terms of section 57. Right, then we can say WAVE will be liable for donations tax as follows. Then we go on. Value of donation now. We agreed that in terms of section 62, it is going to be the market value. Right. WAVE is a natural person. Being a natural person, what we consider next is going to be the section 56 exemption. So section 56 2B. It is an amount of 100,000, but then we say limited to. We'll only extinguish this. This gives us a taxable donation of nothing. Nothing. Because we have got nothing, there's a donation tax. If you want, then we could say, can say donation tax at 20%, section 64. We all know that 20% of 0 is 0. Okay, so the principle is covered there. That one, that one, that one, that one. So the marker will be knowing how many marks to allocate on each day. Right. Any questions on that one? No questions. Right. If there are no questions, we come to this one. On 15 September 2020, Safe in the Sun donated Santan products with a market value of 5,000 and a cost of 4.5 to the Sunshine Children's Home, a registered public benefit organization. There you go. Donation to Sunshine. This one is exempt in terms of section 56 what? It's to a public benefit organization. Section 56 what? People.
H.
Done there. That was the last donation for query 1. Right, so that's how your test looks like. That's how your exam looks like. And you'll be just cruising through these things. If you have studied in detail. Right, let's see another one. Okay. Now, this one is here, could people, it's in respect to query 2. Discuss the donations tax implications. Discuss. When what do you do? Discuss. We're going to be talking there. Right. Discuss the donations tax implications, if any, for plain selling. Need to take note. The company, in case you have to deal with the exemptions in section 56.2, you got for the one for 10,000. In respect of the donation made in query 2, in respect of the 2020 year of assessment. Right. So now the stories are in part B. We are doing query 1. No. Or the stories are in part B. And we are doing query 2. Right. So we go to that. Discuss. We want to hear you talking. Here, writing. So how are you going to discuss? You are going to be in a position to discuss if you have got the theoretical knowledge, if you went through those particular sections. If you did not, just forget about it. Whatever you put down, it's null and void. Where did you get that from? Right. So we go here, good people. Now we are required to write. This is your query 2 there. Right? They write here. Plain Sailing Limited is a December year end. On 30 June of 2020, the company donated an amount of 100,000 to a newly established child welfare organization, not yet a registered public benefit organization. It's a test, it's a past test, this one. Right, so what are the points to take? It's a company. The donation date was that one. Don't worry about the end, because the donation is paid by donation. So we'll make reference to the date in question. The company donated an amount of 100,000. Look at 100,000, and it is not to a public benefit organization. Those are the talking points. Those are the talking points. Those are the things that we're going to be playing around. Right. I want you to discuss. Right, now the depth also will be guided by the points. Because this same question here, if I want to discuss it, I can discuss 3 pages. These are the talking points. But all right, so we move. Now, how are we going to discuss this? How do we respond to such questions in an exam? You start by stating the obvious, right? Start by stating the obvious, which is Plain Sailing donated an amount of 100,000 to a child welfare, which is not a public benefit organization. This is very key, right? Then you can say here now that section 56(1)(h) therefore does not apply. Does not apply. See, you are building your answer nicely. You stated that it is not a public benefit organization, and then now you are telling us that because of that, section 56(1)(h) will not apply, which is true. Right. Then you can say a Plain Sailing will be liable for donations tax as it is the donor. You can quote here your section 59 that says the donor is liable. So now it's a demonstration of your knowledge there. All right, what else do we have to take? Then we can say the donation tax we are discussing. Now, and you have said they stated the obvious, and you have said that is not going to be exempt. Now the next thing is, if it's not exempt, we need to calculate. Now look at your framework. We are now going to be discussing in terms of the framework. At the top there, we need to put the value of the donation, right? So, but you're not calculating, you're explaining. So we'll be saying it in words. Here it's easy, you are given an amount. Remember, if it's cash, the fair value of R1, it's R1. That's why they didn't say 100,000, that is the market value of this. No. Fair value of R1 is R1. So now I'm now looking at the framework. And now I want you to picture your framework. And you are going to talk in terms of your framework. I will talk about this. I will talk about the exemption. I will talk about the tax, the taxable donation. I'm going to talk about the 20%. I'm going to talk about the due date. That's how the marks are allocated, your coverage. So I am going to be moving now with my framework. Right, at the top there, we need to state the value. I'm going to say that now, the value of the donation is in terms of section 62, an amount of 100,000. Right? Now I've written the top line. I now need to consider the exemptions. Right? I now need to consider the exemptions because I'm moving according to the framework now. That's how you discuss these things. So when you're discussing the tax implications, you are actually saying in theory what you will do practically. Because what I would do practically here, I would have considered to whom did they donate public benefit, a company that's not a public benefit. Because of that, I don't apply that. Right? The next thing is I have to know who is liable. Then I have to calculate the liability for that person. And in so calculating, in departing with my calculation, I need to consider the value of the said donation. And this value is given to us in terms of section 62, being the market value. I move. I now need to talk about the exemptions. Are there going to be any exemptions that will apply? It's a company. Will I apply my 10,000? No, I won't. This is not a casual gift. It is more than 100,000. I need to put that down in order for me to get the marks. Then I will say section 56(1), section 56(2)(a) does not apply. Not apply as the donation is not a casual gift. Casual gift. EI more than 10,000 is the marks that you are collecting. I'm moving with my framework. So because there shall be no exemption, it means that the taxable donation, therefore, the taxable donation is an amount of 100,000. Right, I'm now on the taxable donation part of it. Where do I go next? I'm here now. Now I have to talk about this. I have to talk about that now. That's where I am. I'm writing here. Okay, then I would say the donation tax. The donation tax shall be calculated at the rate of 20%. I caught my section 64. Okay, so it's like I've calculated it. If I was doing it practical, I've calculated it. What next now? I need to state the payment date. Right, I need to state the payment date. When was this donation made? It was made 30 January. So by when must it be paid over to SARS? 29 February, because this is a leap year. They will consider that. If you say 28, it's a zero. You can't have a CTA student who doesn't know that, can't see that is it's a what? It's a leap year there. So don't get into yourself into a necessary trap. Then I would say that now the donations tax. The donations tax should be paid over to SARS by 29 Feb 2020. I indicate section 61 is the 60, subsection 1 is the one that says so. Right, discuss. Right, as a bonus, the donation tax amounts to donation tax amounts to, I calculate 20,000. Show a calculation inside. being 100,000 times 20%. Good people. If you do this, you responded adequately. These are the CTA answers. Don't bring your undergrad answers here. You'll be in serious trouble. To just generalize. No, you don't do that. You fight for every mark. So that's how a discussion is done then. Are we together? So you get all the marks. This question could have been even up to 15 marks because there's a lot of coverage there. A lot of things to be covered. Even though it's 2 marks, it doesn't take you 20. It doesn't take you 10 minutes to write all these things. Right? After thorough studying, you are still within the ambit of 2 times. Remember, if a question is 2 marks, you say 2 times 1.5. That's 3. You can write this in 3 minutes. You can write this in 3 minutes. All right. Any question, good people? Any questions? Any questions? Any questions? So you see now how we then put together those sections that we were going through. You have to go through them. Do not go and just to say to a person, help me to actually answer this question. I'm a little bit confused. You're not confused. You did not go through the relevant material. You did not go through the relevant chapters, sections. And the person can be easy to tell. He can tell you that, oh, okay, oh, it's a compound, okay, 20% of that, yeah, 20%. There's no exemption here because it's a casual gift. You are not learning there. You are cutting corners. It will catch up with you. It will catch up with you very fast, because you end up trying to learn it in the exam. It'll be too little, too late. Okay, so there we are fine, man. Yeah, okay, all right. So now then the syllabus continues. So from here, you can go and do 200 questions, good people. You have been shown how we go about this. I've shed some light. I've shed some light. All right. So now let's round up the first part of our syllabus there by continuing to the 2 things that this section that we did not cover there. Now we're left with these 2 to actually finish the entire section there. Okay, so there we go, good people. Identify what is in the syllabus and what is not in the syllabus. There we go. Go and cancel these ones. Nice. Cancel them. Let's cancel them before we start. Now you can open your act, remember? Section 7, Cap C. Can we go there? We start by canceling the things that we do not need. After we have canceled, let me know so that we move. Because you don't want to be busy with things that are not part of your syllabus. You don't have time for lecture. All right, assuming we're there, of which we're there. Anyone who's struggling to navigate the act to go to that section? No one. Right, we are now there. Right, my act is a little bit old. There's been some modification there. Hey, I don't know. Anyone who is using a new act who is able, can you scan that? No, it's going to be a little bit tricky. I think there were changes to Where were the changes? I'm using the old eight. I need to buy a new one. So I use this one, but you take note of the changes there that have happened. All right. Okay, so before that now, let's look at the heading. If you look at the heading, you will have a little bit of insight as to what is going to happen in there. Right. Loan or credit advance to a trust by a connected person. Loan or credit advance to a trust by a connected person. There we go. Before we go far, I want you to tell me what is a connected person. For tax purposes, what is a connected person? Right, you should be able to answer this question. Why? If you don't know, you have to think on your feet. Go to the index, look for a connected person, meaning of a connected person. It will take you to where the connected person is defined. Then read there. You see what it requires us to do. Let's say I didn't know. Someone asked me what is a connected person in an exam, right? You simply go to index, look for the definition, meaning of a connected person, run there where the definition is done, come back and tell me what it is. That's how things are done with people at this level. Remember, every second counts. Where do you find the definition of a connected person? Run to the index, alphabetical order, look for connected person. That will refer you to the section where where the definition of the connected person is. Read that definition, tell me. Injalo lenda. Injalo lenda. So are we there, good people? People. All right, it's section 1. It's section 1. Section 1 is there at the beginning. That's the first section. That's where we define things. So we are going to define what a connected person is, right? So a connected person to a trust, because loan or credit advance to a trust by a connected person. So now you have to find out what is a connected person in relation to a trust. You go to a definition. So you're going to highlight them. There are different forms of connected person, and we'll be covering them as we go. For now, we want a connected person in relation to a trust. Right, I'm on 1 day. Connected person, look for it, alphabetical order. It will take you there. Now, here's the story. It says, connected person means in relation to a natural person. No, I'm looking for in relation to a trust. In relation to a trust, other than a portfolio of a collective investment scheme, is a beneficiary of such trust. So a beneficiary is a connected person to a trust. They've said that, and any connected person in relation to such beneficiary. In relation to a connected person, in relation to a trust, other than a portfolio of collective investment trust, and other person who is a connected person in relation to a trust. Now, what do you mean by this? Trust, good people. If you are to create a trust, but you're not yet on topic for trust here, but you must know what a trust is. Right? A trust is created for the benefit of beneficiaries. let's say we put a person there. He wants to create a trust for his children. You create a trust that is going to be administered by the trustees. This person will put assets there into that trust. Assets. For the benefit of, these assets are going to be used to generate income for the benefit of some certain named beneficiaries. Normally, it could be his relatives, children, etc. So this person that created a trust is called the founder. And the founder automatically becomes a connected person to the trust. It is his trust most. He's the one who created it. The beneficiaries are also connected persons because they've got a vested right, they've got a vested interest in the trust. Right? And then now, if you are a connected person to a connected person, you become a connected person. These guys' relatives will be connected persons with trust. The beneficiaries are a connected person to the trust. The relatives of the beneficiaries are also a connected person to the trust. The chain goes on. Now we have explained the concept of a connected person in relation to a trust. Now the next thing now is to go to our act and find out now what's happening. So now they are saying loan or credit advance to a trust by a connected person. Okay, so now this section, it is going to tell us that now, if a connected person advances a loan or credit facility to a trust, there could be some donations tax implications because we are finding it out. We are finding this under the donations tax section. So then your 7C will go on now to talk about the nitty-gritties. What is deemed to have been donated? And what are the donations tax implications? We find it in 7C. It is a section that you're going to write about in your test and your exam, because it's a new section. They love new things. So now, do yourself a favor and listen careful. What are the stories? Okay, so right. I want you to hear it straight from the source. So I'm going to take you to section 7C so that you get to understand the nitty-gritty, what is going to happen there. So at the back of your mind, we are on a donations tax question. So be wondering, what is deemed to have been donated? Let's go, 7C. They now break it down. 5A, I have to cancel those that are not in the syllabus. 5A, 5B, C, D is in the syllabus. F out, H out. Good. Now to our Act to B. So listen very careful there as you learn new things. Now, we are saying loan or credit advance to a connected person, to loan or credit advance to a trust by a connected person. So the application of this section will depend if the loan granted to a trust, the credit facility granted to a trust, it was so granted by a connected person. The exam will not tell you that is a connected person. They will simply say it's a founder. They will simply say it's the child of the beneficiary, is the father of the beneficiary, mother of the beneficiary. Now it is for you as a text student at CTA level to identify that this is a connected person. So we move. This section applies in respect of a loan, advance, or credit that a natural person, or at the instance of a natural person, a company in relation to which that person is connected in terms of paragraph D1, D4 of the definition of connected person, directly or indirectly provides to a trust in relation to which that person or company or any person that is a connected person in relation to that person or a company referred to in item A, is a connected person, or a company, if at least 20% of the equity shares in the company are held directly or indirectly, or the voting rights in that company can be exercised by a trust referred to in subparagraph 1, whether alone or together with any person who is a beneficiary of that trust, or the spouse of the beneficiary of that trust, or any person related to that beneficiary, or that spouse within the second degree of consanguinity. Right. We move. 1 cap A. Right. If the person, if you are using a new one, right, they've since upgraded that certain things there in 1A. So you have to buy a new Act IPO so that you do the new things. Let me read through on my previous one though. It might be different from yours. If a person acquires a claim to an amount owed by a trust or a company in respect of a loan, advance, or credit referred to in subsection 1, that person must, for the purpose of this section, be treated as having provided a loan, advance, or credit to that trust or a company on the debt on which that person acquired that claim, or if that person was not a connected person on that debt in relation to that trust, or the person who provided that loan, advance, or credit to that trust or company on the debt on which that person became connected person in relation to that trust or person that is equal to the amount of the claim so acquired. Okay, I moved fast there because it is not that important. 2, subsection 2, no deduction, loss, allowance, or capital loss may be claimed in respect of a disposal, including by way of a reduction or a waiver, or the failure, wholly or partly, of a claim for the payment of any amount owing in respect of the loan, advance, or credit referred to in subsection 1. All right. So yes, I've gone through that. Now we have to listen very carefully because that's where the gist of section 7C is coming in. Right. The gist of section 7C is going to come in here. Here is where we are going to be told the action. We are going to action in terms of that section, cap C, subsection 4. That's subsection 3. That's how we reference. That's the part that you're going to be writing about in the exam. So listen carefully. Right. Listen very carefully. Now, this is the action that you're going to be writing about, and is the action that triggers your calculation. That triggers the calculation. So listen carefully. If you miss this, there's nothing you can say about section 7C. Highlight that 3. We need it. Highlight 3 there across the top. If a trust or a company incurs no interest in respect of a loan or advance or credit referred to in subsection 1 or subsection 1 cap A, right? Or interest at a rate lower than the official rate of interest. Highlight the official rate of interest. So we're focusing mainly on trust. So there is a trust there. If it receives a loan, and this loan, either they pay interest at 0% or interest at a rate that is lower than the official rate. So these are the what? Are the facts that must be on the ground there. This section will be triggered. Okay, let me take this call. I think someone wants to. Right. Sorry about that. Right, now I want you to pay attention to the action that is going to take place in 3, because the calculations are going to come from 3. So 3 is very key. Right. If a trust or a company incurs no interest in respect of a loan, advance, or credit referred to in subsection 1 or section 1 cap A, or interest at a rate lower than the official rate of interest, highlight official rate of interest, an amount equal to the difference between the amount incurred by the trust or the company during a year of assessment as interest in respect of that loan, advance, or credit, and the amount that would have been incurred by that trust or a company at the official rate of interest, highlight official rate of interest, must, for the purposes of part 5 of chapter 2, be treated as a donation made to that trust by the person referred to in subsection 1A or subsection 1 cap A. So highlight donation made. On the last day of that year of assessment of that trust, on the last day of that year of assessment of that trust. I hope it's clear. This is where we struggle as students now. This is a big challenge. Someone might have passed it and what else one thought, but without understanding that one. So if you ask them, they may not even explain what is happening there. So please, this you're going to write about it in the exam. Pay attention, know how it works. Section 7C is always tested, and it's tested in many places. It is tested in many places. It's tested under donations tax, it's tested under trust, it's tested everywhere. So I'm talking to you about a key section that you must know. Right, we go. Now, this is what they are saying. I want you to take note that they mentioned that if a trust receives a loan from a connected person, and that loan is either at 0%, meaning that no interest, or that loan is either at an interest rate which is lower than the official rate. I want you to take note that it's official rate, because now in the exam, they'll also give you the market rate, and then you confuse those two. Then you're out. Right. So they are saying, good people, that now, let's say the official rate is 10%, and a loan received, a trust received a loan from a connected person of 1,000, and this loan is at a rate of 0% interest. Now, towards the end, just after chapter 2 there, they say, okay, then they said the difference. So now, the difference between the interest calculated at 10% and the interest calculated at 0%, it is deemed to be what? It is deemed to be the donation. Now let's say, and official rate of interest, they are calculated annually, actually annually. Let's say this donation, okay, year and year trust, good people, take note, the year end of a trust is 28 or 29 Feb. Let's say we're clear about this month. Today, a trust receives a loan of 1,000 from a connected person at an interest rate of 0%. That connected person says to the trust, do not pay any interest rate, but assume the official rate is 10% per annum. So this would be calculation of the amount between the interest at the official rate and the rate at which the loan was advanced. Now, counting to end of the month could be, today we are on the 6th of we are on the 6th of February. Interest for the purposes of tax, we are pushing it using days. The moment you don't use days, we're out. So I'm going to say 22 times 22 over 365. Yes, I'm apportioning here because I have to calculate the interest up to the year end, or as long as the interest is being held. So then we are going to say, what do they call this? This is an amount of 6 rand. So this is a deemed donation. This is a deemed donation. Made when? Made on the last day of the year of assessment. Made on 28 February 2022. Yes, you might have, the person might have advanced that loan at the beginning of the year, that is in March, but it is deemed that it was made at the end of the year of assessment. So this deemed date, highlight it because it is very key. If, for instance, the year of assessment of the trust ends on 28 or 29 February, right? If, let's say, in March, this loan was advanced in March, right? And then we know that our year end is February. There will be other donations here that will take place, right? Right. Though this donation was made first, for the purposes of 7C, it is deemed that it was made there. So you calculate your interest up to year end, and then the donation tax, you calculate it at year end. Do not calculate your donation tax at that stage. That will be a 0, and they're going to actually test you on this. You need to remember the order of donations. This one is deemed to have been made at year end. So for this interest, to calculate it at year end. So the utilization of 400,000 exemption will be applied to other donations there first, and then we apply it on the interest that is deemed to have been donated in terms of section 7C last, because the date of donation for such interest is deemed to have been the last day of the year of assessment. So highlight the last day of the year of assessment, so that when you discuss, so that when you calculate, you will say the provision of subsection 3, that so-and-so is a connected person, he made a loan to a trust, right, at a rate that is below the official rate. Section 7C3 deems the difference between the rate at official rate and the rate at which the interest, the loan was advanced to be a donation made by this person on the last day of the year of assessment. So because it is deemed to have been made on the last day of the year of assessment, when then is it due to SARS? It is due by 31 March XX. Right. In the exam, they'll tell you that maybe donated in August there, discuss the donations tax implication and state the date in which the donations tax should be paid over to SARS. Then when I say August, a month after August, it's September. Then you say by September, you get a 0. The loan that is covered, the donation that is covered under section 7C, it is deemed to have been made by year end. Therefore, it is due by 31 March. The year end of a trust, because they say on the last day of that year of assessment of that trust. I'm a trust, they're like natural person. The year end is the same. The year end is end of Feb. The year end is the same. The year end is end of February. The year end is the same. The year end is end of February. So I can take questions at that stage there, so that this gets explained before we go far. Are we sure we are following? Yes. Presumably. All right. So I'll assume it's well explained. Right. I'm saying things that you must write, right? So please don't go and write the opposite. So that's the action. We're going to action in terms of section 7C3. Even in our discussion, we will dwell much on section 7C3. Right. But we only come to section 7C if there's a loan that has been granted by a connected person. We move. If a loan, I'm now on 4. I hope you highlighted the official rate. If a loan advance or credit was provided by a company, so what is deemed to have been donated here, people, is the interest forgone. If a loan advance or a credit was provided by a company to a trust or another company at the instance of more than one person, that is a connected person in relation to that company is referred to in paragraph B of subsection 1, each of those persons must be treated as having donated to the trust or a company part of that amount that bears to that amount the same ratio as the equity shares or voting rights in that company that were held by that person during that year of assessment bears to the equity or voting rights in that company held in aggregate by those persons during that year of assessment. So this is just an apportionment that if we make a group donation of a loan, the portion that each person is deemed to have been donated is going to be according to the shareholding. So that one is very simple. They say, all right, if we hold shares in a company and we instruct a company to make a donation to a trust, maybe to donate 1,000 to a trust, we instructed the company there to donate to a trust, and we are connected person to those trusts, and it's the two of us, me and you. I hold 60%, you hold 40%. So what they are saying there is that both of us, because we gave the company the instruction, will be liable if the rate of interest is below the official rate. I'm deemed to have donated 1,000 times 60% multiplied by the stories about interest. I'm deemed to have the loan portion, actually the loan portion that I made to the trust is deemed to be 600. So any interest forgone, I part, the one that I'm deemed to have donated, is going to be the difference between the official rate and the rate at which the loan is advanced. And this gentleman here also is deemed to have made a loan advance amounting to 400 to the trust. And if it's below the official rate of interest, we then go with the calculation and calculate the portion that is deemed to have been donated in terms of section 7C3. I hope it's clear. Next, 5A, we don't do cancel. B, we don't do cancel. C, we don't do cancel. With D, we do. Right, with D, we shall do. That trust or a company used the loan, advance, or credit wholly or partly for the purposes of funding the acquisition of an asset, and the person referred to in subsection 1A, the one who donates, or the spouse of that person used that asset as primary residence, as contemplated in paragraph B of the definition of primary residence in paragraph 44 of the 8th schedule throughout the period during that year of assessment, during which that trust or company held an asset, and the amount owed relates to the part of the loan, advance, or credit that funded the acquisition of that asset. All right, so now I did it wrongly. I was supposed to read first U5. Then I go to 5D. So U5 there, it talks about subsection 2 and 3 do not apply in respect of an amount owing by a trust or a company during any year of assessment in respect of a loan, advance, or credit referred to in subsection 1. So they are saying there that deemed donation does not apply if, then I go to section 7C 5D. So they are saying that there are instances. Hey, let me take this correct. Hey, bro. Okay, so here is the story. Subsection 5, good people, is saying that the calculation that I took you through in 3 there may not apply under certain circumstances. And these circumstances are spelled out in D and C. In subsection section 7C 5D. In D, they say that trust or company used that loan, advance or credit wholly or partly for the purposes of funding the acquisition of an asset. And the person referred to in 1A or the spouse of that person used that asset as a primary residence as contemplated in paragraph B of the definition of primary residence in paragraph 44 of the 8th schedule throughout the period during that year of assessment, during which that trust or company held the asset. They are quite clear there. They say, however, if this trust received a loan from a connected person, and this loan was the whole loan or part of the loan used to acquire a primary residence for the spouse or for the donor himself, then we are not going to do the calculation that is in 3. You are going to just tell the examiner that though the loan was advanced to a trust below the official rate, the loan was used, part of it or all of it, to acquire a primary residence that was used throughout the year of assessment by the spouse of the donor or by the donor himself. Therefore, no deemed donation applies. Right, Asambe. D2, the amount owed relates to the part of that loan, advance or credit that funded the acquisition of that asset. So the same as the one in 1 day. Right, E, the loan, advance or credit constitute an affected transaction as defined in section 31. That is subject to the provisions of that section. That one is for, that part E is only for level 2. And the ones who do affected transaction are the ones who do section 31. Sison. Yes. Right. The loan advance on G, the loan or advance or credit is subject to the provisions of section 64E4. We'll look at that one, dividend tax. So our 7C now is done. What we need to see are the calculations, recalling what I said, and we'll perform the calculation. Okay, fine. But let's also touch on D there. It's actually brief, short and sweet. It's short and sweet. Hey, someone saying they are not able to connect. Let me tell them what to do. Okay, sorry, class or team, I was trying to connect someone. All right, so I was on the issue of all right, we're saying we're now going to section 17. This one, it talks about the calculation of what? Of the amount of interest. Remember, they said what is deemed to have been donated, the difference between the interest at the official rate and the interest at which the loan was advanced. In instances whereby the loan was advanced at a rate that is lower than the official rate. So we move. The calculation itself. I have actually demonstrated a little bit of calculation here, but you might not have known why am I apportioning using days? Why is he apportioning using days and not months? It's going to be answered in D. And you shall apportion according to the provisions of D. Because if you are not going to do so, you are not following law. You are not following the Income Tax Act. So you deserve a 0. They won't be lenient there. This is not an undergrad. This is an undergrad. They'll say, okay, it's fine, apportion using days. But later on, we are going to teach you that you apportion. Okay, so the undergrad, they can accept apportionment of months, but here they want days. Know your calendar. Right, where it must be determined for the purpose of this act that what amount would have accrued or been incurred as interest in respect of any loan, debt, advance, or amount of credit provided to a person or an amount owed by a person, had that interest accrued or been incurred at a specific rate of interest. The amount must be determined without regard to any rule of the common law or provisions of any act, in terms of which an amount of interest, fee, or similar finance charge that accrues or is incurred in respect of a debt may not, in aggregate, exceed the amount of debt. So in other words, here they are saying interest, there's no way, right, for tax purposes that the interest can exceed the debt in question. The interest cannot exceed debt, fine. Or no interest may accrue or be incurred in respect of the debt once the amount has been accrued or been incurred as interest is equal to the amount of that debt. Same explanation. They say here we don't have the Machonisa type of interest that can be more than the debt. So they say that now in the instances whereby the interest is now more than the amount of the debt, the interest shall be limited to the debt. You are not going to see this in the exam. I can guarantee you kind of, yes. There's no way they can say the interest rate is 110%. In that case, the interest becomes more than the debt, isn't it? It won't make sense. It won't be a question that is practical. Then we move. B, a simple interest calculated daily. I want you to highlight that one. They say interest is calculated as simple interest, not compound, but simple interest. And it is calculated daily. So when I do the apportionment using days there, I can safely quote section 7D. That you see Mr. Examiner, that apportionment, the reason why I use days is because I'm guided by section 7D, which says that now the interest is deemed to have accrued on daily basis. You get your mark. So if it comes as a discussion question again, we are talking this. We are breaking down, demystifying section 7C3. The interest, whatever is deemed to have been a donation and stuff like that. Then you say in terms of section 7D, the interest amount for the period shall be apportioned using days, as section 7D deems the interest to accrue on daily basis. You are adding a section. The marks, good people, are sitting on the, or are based on the number of sections that must be discussed in that question. Right? So you can see a simple question there, and then they say 10 marks. Then wonder, where is this 10 marks coming from? Because I just have to say section 7C applies here. Therefore, the interest, the difference between the interest at the official rate and the interest at the rate at which the loan was advanced is deemed to be an interest that is donated on the last day of the assessment. You left out some certain sections. You did not talk about section 70 that says that the interest is deemed to accrue on daily basis. Therefore, in the calculation of the interest that is deemed to have been donated, we shall apportion using days. Right. Any questions before we do a question on that one? Know your section 7C, good people, please know it. And you'll be lucky to know it on the first day. Like we are doing like this. It's a bonus for you guys. I'm telling you, this section will make a whole lot of people run there. Because you do your calculation, you look at the answer. They say, maybe the donation was done during the year, but then they say it must be paid by 31 March. You ask yourself, why? Why? Yes, because you do another question thinking that that one has got a mistake. Same story. The due date, they put 31 March. You'll be in trouble. You are going to be trapped. But I've shared a question there from a past test paper that I want us to go through. And I'm going to be very slow on that one. I'm not going to rush you when we do the first one. I'm not going to rush you when we do this first one. I need to explain the nitty-gritties. I have to explain the nitty-gritties of it. I have to explain the nitty-gritties. There it is. Right, I want to go where it is. Oh, yes, it's here. I highlighted it, I remember. Then the required is, what part is that? Part C. You might say it's 3 marks here, but you know what? It's CTA, 3 marks, you fight for it. You fight for it. Fight for it. Because once you leave out one thing, that 3 marks up. Right. There we go, good people. Calculate. We are calculating the donations tax consequence for GEMS for the year of assessment, for the 2020 year of assessment. Assume that the value of GEMS prior donations exceeded 30 million and that no other donations arose other than the ones mentioned. So when they say assume they exceeded, they are saying the donation tax will use 30%. So I want you to read through, use 25%. Right, I want you to read through the scenario there and think what is going to happen. So I'll give you a few minutes. You can even actually do the calculation. I'll give you All right, so I gave you more than enough time, good people. More than enough. Okay, let's see the application of this now. Right. So you're lucky to have finished the donations text so quick. Okay, so here's the story of this gentleman here. They want us to calculate. So here we're not going to be saying anything, just calculate. So I wanted you to take note of that now. There they say, it's a trap also, as you can see. Prior donations exceeded. It means that the donation tax is going to be calculated at that rate. Where are we getting that from? Section 64, 1B. Is it 1B or 1.2? Which one talks about the 25%? How do you reference that one? 1B, 1C? Hi, people, I teach you these things so that you assist me most. A.
It's 1A.
Yes.
1A2
like that. Yes.
Yeah.
That's where the rate is. So in your calculation, we need to see that. Right. You are calculating. We go to the story now. Right. James Sikele provided the family trust. This is a family trust. So he is connected. It belongs to the family with an interest-free loan of 1.1 million on 1 February 2020. So it's an interest-free loan. The rate of interest is 0%. Right? To fund the trustee's acquisition of investment property. So it is an acquisition of investment property. Investment property is acquired to earn rental income. It's not him who's going to stay there. It's not his spouse who's going to stay there. So don't say Section 7C3 does not apply because he occupied the no. Right. A market-related interest rate is 10%, and the official rate of interest is 8.75. When you are starting the act through, as you prepare for this section, you are only told that you use the official rate. But now you come to the exam, there is an introduction of the market rate. Now you try to remember what I said in class. Did that guy say the official, or did he say, the interest, the what? Did he say official or he said market rate? I said market rate is the act that is saying that. It's not me. But now you are provided with two there because they are testing the principles. They want to hear how you're going to dramatize them, and then they punish you. So if you are starting a day before the exam, should be, you're going to dramatize them. You're going to use whichever rate you want. So there is the story. Take note of the donations date there. 1 February. Go to your scenario. They say for the year ended what? For the 2020 year of assessment. Now, I am going to do that one. Okay. And I'm going to use the official rate because that's the one that requires us to do that. Now, here is the calculation. The same question can come, but this time not as a calculation, but as a discussion. This thing is now betraying me much. The devil is a liar. All right. So you are going to say deemed interest donated. It is deemed. You are taken as if you donated that interest. Deemed interest donated. Deemed interest donated. Right. And it is deemed in terms of section 7C3. You proceed with the calculation that you did in class. We said that now the difference between the interest at the official rate and the interest at which the loan was advanced. Right? Then we have to apportion. Remember, they say it is deemed to have been made on the last day of the year of assessment of that trust. So the last day of the year of assessment of the trust is 28 Feb. So it was donated at the beginning of the year. So it was held by that trust for 29 days because February 2020 is a leap year. So my apportionment here, good people, I am going to say times 29 over 365. And when I cut that one, I need to indicate to the marker that you see me apportioning using days there. I know what I'm doing. 100. So we move times 8.75 divided by 100 is equal to that one times 29 divided by 365. We get an amount of 7647. So that particular guy is deemed to have donated an amount of 7647. Right. I didn't say market value here because this is a donation that is captured under 7C. The difference between the interest of the official and the rate at which the loan is advanced is deemed to be a donation. Right. This guy is a natural person. Right. So here now is going to be a story. Assume that the value of this prior donation is exceeded and that no other donations other than mentioned in the question. So this is the only donation, good people. Now, what is the next thing that we do? Look at your framework, consider your framework. After identifying your value of donation, where do you go next? But Mom Tim, what is the next thing? If framework ihamba kanjani? We consider the exemptions, good people. From the value of donation, we consider the exemption. So it's a natural person. Are we going to have any section 56 2B exemption? Yes, this is the only donation. It is going to be there. So you write here, it is an amount of 100,000, but it shall be limited to 77647. So that takes us to the taxable donation of how much? Taxable donation of 0. That gives us a donation tax at 25% because they've indicated to you that the cumulative donations, they have exceeded 30 million. That's what the examiner was interested in seeing there. So now quote this one, that this one is not coming out of my head. Remember we said section 64, 1A2, 0. Right, here they were lenient, they wanted you to calculate. What about if they wanted you to talk, to do the talking? You will have to explain what is happening there now in words. You now have to say what is happening there in words. Right, I'm giving you a homework. I'll share it there. Okay, so if they want you to discuss the donations, oh, okay. What is the due date here? What is the due date?
29 Feb. 29 Feb.
No. Remember, your date is in terms of section 61. But section 61 says you must pay over the donation to tax to SARS by when?
Oh, the following month, in March.
Yes, right.
Okay.
By March, 31 March 2020. So your homework is here is going to be, your homework is going to be part C. I'm sharing the homework question. It is going to be your part C there, part cap C. You go to the required there, the prior test, do the things that you did in class, then you are fine. Then you are good to go. All right, so we can end it here. Any other questions? Those who want to join us going forward, the teachers are there in the group, I think, yeah. They are there in the group. If you want to pass. All right, so people, thank you for coming. Good luck with your CTA year. Do the best out of it. Pass once, CTA or honors. So do the best out of it.
Thank you.
All right, sharp people.
Thank you.
Bye.
Bye.
Sorry, Tulisani, are you still there?
Yes, yes, I'm still there.
Do we have a group? I'm not in a group yet. Can you please add me on the WhatsApp group?
On the WhatsApp group.
Yeah.
All right. Right. You see the contact number there for the administrator is going to put it now, right?
All right. No, that's fine.
All right, sure.
All right. Thanks.